Hey, hi guys, this is Arpita Tulsyan here. I hope you all are doing good. Yes, so here I am with the super quick revision video for paper 4 Economic Laws and Securities Law for the May 23 examinations and onwards. So here we are going to revise each and every chapter from exam point of view. Yes, and it is going to be super quick, assuming you have done it and now you're referring this particular video for your final revision. Yes, this has been taken up from the 10th edition book, which is applicable for the May 23 examinations. In case you have the book, well and good. If you need the book, then the book is available on our website, that is arpitatulsyan.com. We'll try to cover maximum things in this particular video in the least possible time, and timestamps etc. When I'll be uploading it on YouTube, in the description section the timestamps etc. will also be available with you, so that it becomes very easy for you to locate a particular chapter's video. And yes, so I think we are all good to go for starting this particular revision. Revise the entire syllabus, cover maximum things possible for your examination. Make sure that you do writing practice of a few answers so that you have a good grip while presenting an answer in the exam. Make sure that you solve the entire paper. Try to cover maximum syllabus while your studies during your reading time. And I hope this video is going to be helpful for you. I wish you all the very best for your examinations. You can continue watching this particular video, and do let me know in the comment section if this video was helpful for you. I love reading your comments. And thank you so much for showering your love on me since long. Thank you so much. Okay, so let's start with the super quick revision of the chapter, that is Prevention of Money Laundering Act 2002. Let's start with it. We will try to cover the most important things and maximum things in the least possible time. Let's start with it. The first thing is the meaning of the term called as money laundering, or what is the purpose of this particular act, that is money laundering. So money laundering is where we are trying to hide the actual source of income, that is the money which has been earned from illegal sources. We try to show as if that money has been earned from legal sources. That is the meaning of money laundering, and purpose of this act is basically to stop these type of activities, to prevent money laundering, to provide, suppose if we have acquired any asset out of this money laundering, then to confiscate the assets which have been acquired out of money laundering, and to reduce the activity where the money goes into illegal activities, or the money is earned out of illegal activities. We are trying to reduce those type of activities. Okay, so this is the meaning of the term called as money laundering. Basic meaning, this is not the definitional meaning of money laundering. Basic meaning and the purpose of this particular act, that is prevention of money laundering. And yes, the notes that you can see here on the board, these are from your 10th edition of law book, which is available on our website arpitatulsyan.com, which is specifically applicable for your May 2023 examinations. Yes, let's continue ahead. So now the next thing that we have to do here is money laundering. Money laundering, they say that it is a single process. Okay, it is a single process with 3 stages. 3 stages which you already know. You can repeat with me. First one is placement, second one is layering, and the third one is integration. Placement is such a thing where the criminal activity is done and the money is now put into the system. Okay, after that, layering, this entire money which we have earned out of illegal sources, this is divided into various transactions, and it is divided over various accounts, by which we totally forget from where the original money was actually earned, from which source, from which illegal source the money was actually derived. That is totally gone, because the money that we have earned from illegal sources is divided over through various transactions and various accounts, and therefore it becomes very difficult to detect the origin from where the money was actually earned. And the last one is integration. By doing this, the money which was obtained out of illegal sources, that gets mixed with the money which was obtained out of legal sources. It gets integrates, and therefore now there is nothing called as money derived out of illegal activities. right? Any basic example of money laundering? Basic example of money laundering can be smuggling, it can be theft, it can be dealing into drugs, it can be financial scams like stock market scams, smuggling, etc. Right? These are your kidnapping, murders, etc. These are your basic examples of money laundering. Yes. Okay, then going ahead to the next part, that is some important definitions which have been given here in your book. So the first definition that is given, definitions are covered in section 2 that you already know. So money laundering is covered in section 2(1)(p), but then they say that the meaning of the term money laundering is given, the definition of that is given in section number 3. This is one such definition that you have to remember, which is called as offense of money laundering, or we can say that who will be guilty of the offense of money laundering. So if there is any particular person, okay, if there is any particular person who is involved in any such activity, who is assisting any other person, who is a party to such offense, or who is actually involved in that particular offense which relates to proceeds of crime, where we are involved in concealment, possession, utilization, acquisition of any particular property, which we are trying to project, which we are trying to show as if it is an untainted property. Untainted property means as if it is a clean property, we are trying to show. Then in such a case, but actually that money was derived, or actually that property was derived out of proceeds of crime, so in that case we become guilty of the offense of money laundering. Clear with this? Yes. Okay, and we will be guilty, that particular person will be guilty if that particular person is involved in concealing that proceeds of crime, using that proceeds of crime, having possession, if any such person is having the possession of that proceeds of crime, or if that person is trying to project, it is trying to show, they are trying to portray as if it is an untainted property, then in such a case those people will be guilty of the offense of money laundering. And till the time, see, today suppose if some person has earned that proceeds of crime, today he is guilty, and he will be guilty till the time he is ultimately enjoying the proceeds of crime, till the time he is having that proceeds of crime with him, till that particular time that person will be guilty of the offense of money laundering. Yes, so this definition of money laundering was given under section 2(1)(p), but what was written in section 2(1)(p), it was written that the definition of the term called as offense of money laundering is given in section number 3. Yes, and that's why whatever we studied, that was coming from section number 3. Now, from this we get two very important terms. One is proceeds of crime, and the other important term there is property. Now, what do you mean by the term proceeds of crime? Okay, what do you mean by the term proceeds of crime? Proceeds of crime means any property, okay, see the words, any property which is derived because of any criminal activity. See the name now, proceeds of crime is what? Proceeds of crime means something, some proceeds earned from criminal activity. So any property which is derived from your criminal activity. Okay, ma'am, what do you mean by criminal activity? Criminal activity is any such offense which is mentioned in the scheduled offense. Okay, any such offense which is mentioned in the scheduled offense, if any property is derived from that, then the value of that particular property, whether that property is in India or whether that property is outside India, doesn't matter, that value will be considered as your proceeds of crime. Okay, so proceeds of crime is some amount which we have earned by doing some crime which is mentioned in scheduled offense. So ma'am, what do you mean by the term called as scheduled offense? Scheduled offense is nothing but a list of offenses which is given for your PMLA, which is divided into 3 parts, part A, part B and part C. Part A contains the list of the offenses. If we have done any of those offenses, we will be guilty of money laundering. Part B also contains some specified offenses, but we will be guilty of the offense of money laundering only if the amount involved in that particular offense is more than or equal to rupees 1 crore, or any such offenses which are given under part C. So for part A and part C there is no limit. For part B there is a limit. We will be guilty under PMLA only if the amount involved in the offense is more than or equal to rupees 1 crore. Very clear with this? Yes, and for your information purpose, at the end of your 10th edition book, this particular volume, we have the list of the scheduled offenses also. Right. Another term that we saw in the definition of the term called as proceeds of crime was a term called as property. Remember, any property that was derived out of any criminal activity related to scheduled offense. So ma'am, what do you mean by property? Property can be any type of asset, any type of asset. It can be movable, it can be immovable, it can be tangible, it can be intangible, it can be situated here in India, or it can be situated outside India. It can be material, means big amount, or it can be immaterial also. Doesn't matter. Everything will be included in the term called as property. So if I say jewelry, if I say cash, if I say land, if I say any particular other type of asset, everything will be included in the term called as property. And if we have derived any property by doing any scheduled offense, okay, then that will be considered as proceeds of crime. And if we have derived that proceeds of crime, then we will be guilty of the offense of money laundering. I hope I am very, very clear till here. Yes. Okay. Then after that, going on to, these are some important definitions which we can cover here in the super quick lecture. Yes, rest of the definitions are given in the book. You can simply go through them once. Then going on to the next section, I'm going to the next section, that is punishment for the offense of money laundering. Very important section. As you can see here, section number 4. See the reference of the question numbers which I have given, which shows that how important it is and how many times the question has been asked from there. Yes. So now section number 4, any particular person who has done the offense of money laundering. Ma'am, offense of money laundering, where was it given? Offense of money laundering was given in section number 3. So if there is any person who is found guilty of the offense of money laundering, then that person will be liable for some punishment because he has done this grave offense. So he will be liable for a rigorous imprisonment of minimum 3 years, which can go up to 7 years. So imprisonment 3 years to 7 years and fine of any amount. This is the punishment which will be given for any particular person who is involved in the offense of money laundering. But if a particular person is specifically held liable under an act called as Narcotic Drugs and Psychotropic Substances Act 1985, name to be remembered, Narcotic Drugs and Psychotropic Substances Act 1985, then means he has done an even more graver offense. In such a case, that person will be liable for imprisonment minimum 3 years, but which can go up to 10 years. Earlier it was 3, like for the other offenses it was 3 to 7. Here it is 3 to 10 and fine of any amount. I hope I am very, very clear with this. Yes. Okay. So this was your section number 4, where they had specified the punishment for the offense of money laundering. Very clear with this? Yes. Now going on to the next section, that is section number 11A. Now comes some simple things and some procedural things. Now what they are trying to tell us here is, see, whenever we are earning any amount, any illegal money, I can say, and we are trying to convert it, like what we say in your own terms is black money into white money, or any illegally obtained money, when we try to convert it into legal sources, then one intermediary is always involved, knowingly or unknowingly, and that is your banks. Right, whenever, say for example, if we have earned some illegal money and we want to convert into white, every month, say for example, we deposit 5,000 rupees into our bank. No one asks us that from where did you earn this 5,000 rupees, right? So in these cases, banks etc. are also unknowingly, knowingly or unknowingly, even the banks are involved in this. So what has the PMLA done is, PMLA has put some procedures even for the reporting entity, that you have to be careful. You have to be careful whenever the client is doing the transactions with you. These banks, financial institutions, etc. are cumulatively called as the reporting entity in this particular act. Right? Now listen, what is the first thing which has been told to this reporting entities? Whenever a client comes to you, whenever a customer comes to you, make sure that you first verify their identity. Okay, that you first verify the identity of the clients who are coming to you. So ma'am, now how do we verify the identity of the clients etc.? There are 4 ways of identity verification. First one is online authentication under the Aadhaar Act. Example, Aadhaar based OTP, you must have heard and used. Okay, next one is offline verification under Aadhaar, where we submit the photocopy of the Aadhaar etc. Next one is your verification using passport, and the last one is verification using any other officially valid document as notified by the central. government. Any of these methods can be used by the reporting entity for the identity verification. You must have heard about the term called as KYC. So this is something like that only. I hope I am very, very clear with this. So these are the 4 modes of verification which every reporting entity has to follow mandatorily whenever they are doing any sorts of transaction with their clients. Yes. Then come to the next section, that is section number 12. Section number 12 talks about obligations of the reporting entity. What are the obligations of the reporting entity which it has to do mandatorily as per PMLA? See, other acts can also be applicable to the reporting entity. Example, Banking Regulation Act can be applicable, RBI Act can be applicable, Companies Act can be applicable to the reporting entities. But whatever we are studying in this particular chapter, these are the requirements which have been put forward by the PMLA 2002, right? So now there are 3 most important obligations which have to be followed and fulfilled by every reporting entity. Okay, what are those 3 obligations? Let's try to understand. What are the 3 duties of the reporting entity? First one, it has to maintain record of all the transactions as given in rule number 3. In your book, immediately after this, I have given rule number 3. So, every reporting entity has to maintain record of all the transactions as mentioned in rule number 3 for a period of 5 years. Okay, for a period of 5 years from the date of transaction. Means whenever there is a transaction between the client and the reporting entity, record of all those important big value transactions as specified in rule number 3, those transaction details have to be maintained by every reporting entity for a period of 5 years from the date of transaction. Second one is whenever the reporting entity is now maintaining the record of those transactions, whenever the PMLA authority, that is director under PMLA, not the company's director, director under PMLA, whenever he comes and asks for certain information, reporting entity will have to furnish that information to the director. Director is nothing but your government official under PMLA. Okay, within some prescribed time, it has to furnish. In the first point, it was maintaining the record of transaction. In the second point, it has to furnish the information to the director. And the last one is again maintaining record of documents. Above it was maintaining record of all the transactions. Here it is maintaining record of all the documents for a period of 5 years. Whatever documents are exchanged between the client and the reporting entity, details of that has to be maintained by every reporting entity for a period of 5 years after the business transaction, business relationship between the client and the reporting entity has ended or the account has been closed, whichever is later. Means all the time when the account is opened for that particular time, it has to maintain the record of all the documents. Even once the account has been closed, even after that for a period of 5 years, it has to maintain the record of all these documents. I hope I am very, very clear with this, everyone. Yes, so first point, maintain record of all the transactions for a period of 5 years. Next point, furnish that information to the director. And the third one is maintain record of all the documents for a period of 5 years after the business relationship has ended or account has been closed, whichever is late. Very clear with this? Okay. And which the transaction details that we were maintaining, that the reporting entity was maintaining, that was not for all the transaction. It is for all the transactions as specified under rule number 3. Rule number 3 gives certain category of transactions for which the details has to be maintained by every reporting entity. I hope I am very, very clear till here, everyone. Yes. Okay. Then going on to the next section, that is section number 12AA. Okay, 12AA talks about enhanced due diligence. Now, every reporting entity was supposed to comply with the obligations as given under section number 12. Before that, it was required to do the identification of the clients, identification of the clients. That we had done under section 11A, that was done by 4 methods. Remember, online authentication under Aadhaar, offline authentication under Aadhaar, passports and any other officially valid document of the central government. First, ID verification was done, then obligations was fulfilled under section number 12. Now they are giving us some more points for some more important transactions, that is section number 12AA. Okay, 12AA talks about enhanced due diligence. Enhanced due diligence, more care is to be taken while doing big value transactions by the reporting entity. So whenever the client wants to enter into some specific transactions, not for all the transaction, for some specific transaction, reporting entity has to first verify the ID of the clients, verify the identity of the clients, right? Same of Aadhaar, passport or any other document. Then it will even take additional steps to examine the ownership and financial position. Is the client even capable of, does he even have that financials in his balance sheet to do such type of transactions, such high value transactions? And then the reporting entity will try to find out the purpose. Why is the client entering into such high value transactions? So basically the bank is kind of, not exactly, but kind of doing scrutiny or kind of doing audit why the client wants to enter into some high value specified transactions. If bank gets good answers, supporting answers for every question that has been asked, then the bank will allow the client to do the transaction. But if the client fails to fulfill the above requirements, means the client is not able to answer the bank, then in such case, and if the bank is of reporting entities of the opinion, know that this transaction can be a suspicious transaction, this can lead to money laundering, etc., then the bank or the reporting entity will do further monitoring. It will do further checks into the client's books of accounts, etc. And if later on, if it is of the opinion that okay, we should allow the client to do the transaction, then the reporting entity will allow the client to do the transaction. But if the reporting entity, even after further scrutiny, if it is of the opinion that no, this may lead to money laundering, etc., then the reporting entity may even deny. Okay, the reporting entity may even deny the client to undertake that particular transaction. Okay, but this is again not for day-to-day transaction which a client enters into. This section, entire section of enhanced due diligence, deep checking, we can say. This is applicable only for specified transaction, maybe the transaction which has high value, or the transaction which involves forex, or the transaction which has high value of imports or exports, or the transaction which has high risk of money laundering, terrorism, terrorist funding activities, and all those things. Only for those transactions the section 12AA is applicable. I hope I am very clear with this, everyone. Yes. Okay, going ahead with the next section, that is section number 13. Section number 13 talks about powers of directors. Okay, remember we had just seen this word called as directors. Director here is the government official to whom we were furnishing the information under that obligation section. So what power that particular person has? He is basically a PMLA authority, right? So what powers does that person has? This particular director has the power to do inquiries. Okay, he can do inquiry into the books of accounts of the reporting entity. He can get a special audit done. Apart from your normal statutory audits, he can even get a special audit done by a chartered accountant, and the audit expenses of this thing will be borne by the central government. And then if the director of the this PMLA authority, if it is of the opinion that the obligations are not complied by the reporting entity, etc., then it can even issue warnings to the reporting entity. It can tell them, please comply with the instructions. It can tell them to do periodic reporting so that we can have a watch on them. And if suppose they are still not complying with any of the obligations or directions given by the director, then penalty can be imposed, which may range between rupees 10,000 to 1 lakh for each failure. This is whose powers? This is the power of the director. Ma'am, who is this director? Director is nothing but the government official under PML. Very clear with this? Yes, this is nothing but the powers of the director. So what we have seen till now was, initially we had seen the definition part, then we saw the punishment for money laundering, which was given in section number 4. Then we checked the identity, we verified the identity of the clients that we did under section 11A by 4 methods. Then we went to obligations of the reporting entity, which was there in section number 12. three obligations of the reporting entity we had done. Then we saw enhanced due diligence under section 12AA, enhanced due diligence for some specified transactions. And then we saw powers of the director under section number 30. Right? Now, going on to the next part of the chapter, that is your attachment, adjudication and confiscation. This is another big part and another important part of your chapter. Now, let's try to understand this. What is going to be there in this attachment, adjudication and confiscation? Let's start with it. Can we start, everyone? Yes. So, attachment, adjudication and confiscation. Now, see, if there is any particular person who is involved in the offense of money laundering, we had seen one thing is that that particular person will be liable for punishment under section number 4, right? That is okay. He was liable for punishment. But what if that person has acquired some property by doing the offense of money laundering? Someone kidnapped me and he got jewelry in return from some ex-person for kidnapping me. Then what about that jewelry? That jewelry should be confiscated, right? He should not be enjoying that jewelry which he has obtained out of the offense of money laundering. So now, what to that particular person, we gave punishment under section number 4. That we gave to that particular person. But what about the property? What about the property that was involved in money laundering? So can we say that even that property should be confiscated, right? So now in that it can involve 3 stages. First one is provisional attachment, second one is attachment, and the third one is confiscation, right? So now first let's talk about provisional attachment. Okay, first let's talk about provisional attachment. Provisional attachment is such a thing. Provisional attachment is such a thing where that director, okay, the director under PMLA which we were talking about, the director or any officer but not below the rank of deputy director. We have different varieties or different levels of directors here. So director or any other officer not below the rank of deputy director, if that person has reasons to believe in writing, then if that person is of the opinion that some person is having the possession of proceeds of crime, and that person is trying to conceal it, that person may transfer that proceeds of crime, or that person may deal in that proceeds of crime, then such director or any officer not below the rank of deputy director, such person may provisionally attach. Such person may provisionally attach the proceeds of crime. I did not use the word attach, I used the word provisionally attached the proceeds of crime. Very clear with this? Yes. Now listen. Now who did this provisional attachment? Provisional attachment was done by the director or any officer not below the rank of deputy director. Very clear with this, right? Now one important thing that he has to do before he does the provisional attachment is, before he does provisional attachment, he has to prepare a report that he is of the opinion that such a so and so person is having the proceeds of crime, and that report will be forwarded to the magistrate. This is just like filing a complaint with the magistrate, and then only that person can go for provisional attachment. But if in some emergency case we do not have time to go to the magistrate to file the complaint, then in such cases we can first do the provisional attachment and then we can go and file the report or the complaint to the magistrate. And once a provisional attachment is done, say for example provisional attachment happened today, then the validity of the provisional attachment is going to be for a period of 180 days from the date of provisional attachment. And if during these provisional attachment, during these 180 days, suppose if there was any stay order which has been passed by the High Court, then we are going to get some extra period, that is the stay period plus ad hoc period of 30 days. Right? This is the extra time period which we are going to get because of the stay order. Very clear with this? So as soon as the provisional attachment is done, provisional attachment is going to be valid for a period of 180 days. And as soon as the provisional attachment is done, from that day, within a time period of 30 days, the director will go and inform to the next level of authority, that is the adjudicating authority, that sir, I have done provisional attachment because I am of the opinion that there is a case of money laundering here. Okay, so this was done by the director. valid for a period of 180 days. As soon as the provisional attachment is done, within 30 days, we will go and file a complaint with the adjudicating authority that, sir, there is a case of money laundering, and now you can take the case ahead. Okay, and yes, during this provisional attachment, we can still use the property. We cannot transfer, we cannot deal in the property, but we can still use the property. Very, very clear with this? Yes. Okay, so now provisional attachment. After provisional attachment comes the next thing, that is the final attachment, or we can say adjudication, final decision making. Provisional attachment was done by the director or any officer not below the rank of deputy director, and the next thing will be done by the adjudicating authority. So as soon as the adjudicating authority receives the complaints from the director, the adjudicating authority will issue a notice called as show cause notice. Adjudicating authority will issue a notice called as show cause notice for a period of 30 days, that you have to tell me why we should not treat as if you are involved in the offense of money laundering, and tell us from where did you earn this asset, how did you purchase this asset. Every detail will be asked by the adjudicating authority to that particular accused person, and to that he has to reply within a time period of 30 days. Okay, now depending upon the reply which is given by that accused person, reply can be what? Reply can be a good reply, a satisfactory reply, then we can release that particular property. If the reply is an unsatisfactory reply, then the provisional attachment may get converted into attachment. Very clear with this? Yes. Now suppose if the reply given by that accused person is a satisfactory reply, then we will release, then the property is free. But if the reply is unsatisfactory reply, or there is no reply from the accused person, then we will pass the attachment order. Right? Attachment order is basically passed by whom then? Attachment order is passed by the adjudicating authority, and it is going to have a validity of 365 days. Means as soon as the attachment order is passed, it will be valid for a period of 365 days. And within these 365 days, suppose if there is any stay order by the High Court, then we will get an extra period of stay. Suppose if the stay was for 45 days, then we will get an extension of 45 days. Here there is no ad hoc period of 30 days that is available. Okay, and during these 365 days, the final confiscation order should be passed by the special court. Okay, attachment order was passed by the adjudicating authority, confiscation order is passed by the special court. Very clear with this, and that has to be done within a time period of 365 days. Very, very clear with this. Special court can pass an order that yes, this should be confiscated, or special court can even pass an order that no, the property is not involved in money laundering and therefore it is free. Even that such type of order can be passed. So the final decision making authority here is the special court. So I hope you are clear with the three authorities who were there in the chapter. First one was what? First one was your provisional attachment. Provisional attachment was done by whom? Provisional attachment was done by the director or any officer not below the rank of deputy director. Validity was 180 days plus stay period plus 30 days if there is any stay. Second level is your attachment. Attachment order is passed by the adjudicating authority and having a validity of 365 days. And the last one is your confiscation order. Confiscation order was passed by the special court. I hope I am very, very clear with this. Yes. Okay. Then going on to the next one. That is vesting of property. Now, as soon as the property is confiscated, confiscation order was passed by whom? Confiscation order was passed by the special court. As soon as the property is confiscated, the property belongs to whom now? The property goes to the central government free from all the liabilities. If there is any liability attached to that particular property, that liability does not go to the central government. Only the asset goes to the central government. Very, very clear with this? Yes. So see the legal words that you have to use in the exam. All the title in such property shall vest in the central government, which shall be free from all the encumbrances. Encumbrances means free from all the liabilities, free from all the charges. Very clear with this? Okay. Now, the next thing that they tell us here is the adjudicating authority that was there in the chapter. Adjudicating authority who had come for the attachment part, that has all the powers as vested in a civil court. Okay, that is discovery and inspection of books of accounts, enforcing attendance of any person, taking evidences on affidavits, issuing orders for summoning any person, for examination of witness, etc. Whatever powers are there with the civil code, same to same powers are also there with the adjudicating authority. Yes. Acha. Next section, section number 19, power to arrest. Now, as we try to link it with section number 4, what was the punishment for the offense of money laundering under section number 4? It was imprisonment and fine, right? Imprisonment 3 years to 7 years, and in case of drugs, it was 3 years to 10 years. So can I say, if we want to give imprisonment to any particular person, we have to first arrest that person. Yes, so these director or deputy director, these people have the powers to go and arrest any particular person without an arrest warrant. Without an arrest warrant, just go to that particular person, inform him the reason why are we arresting you, arrest that particular person, and that person will be brought to the special court or judicial magistrate or metropolitan magistrate within 24 hours of his arrest. Traveling time would be extra, obviously, but within 24 hours, as soon as he is arrested, within 24 hours, he should be presented before the special court or magistrate for further process. Very clear with this, but one thing that you have to remember here is, for arrest under PMLA, arrest warrant is not required. It is not mandatory. We can go and arrest any particular person without an arrest warrant. Just inform him the reason why are we arresting him, and that particular person can be arrested, and then he will be presented before the jurisdictional special court or judicial magistrate or metropolitan magistrate. Very, very clear with this? Yes. Okay. So till here we are done with our basic definitions part, punishment part, procedural part for reporting entity, and then the 3 important things, that is provisional attachment and confiscation. Very, very clear with this? Yes. Now going on to the next part of the chapter, that is your appeal provisions. Yes, let's go to the appeal provisions, everyone. Now we already know that whenever any authorities come into picture, and whenever there is any accused person who is coming into picture, there can be a dispute between the two. Means the authorities would say that you are liable, we would say that no, we are not liable, etc. For that purpose, we have got the appeal provisions coming up here. Okay. Now PMLA does not have its own appellate tribunal, so we take the appellate tribunal from the Smugglers and Foreign Exchange Manipulators Act. Okay, appellate tribunal, we have got 2 levels of appeal. First one is before the appellate tribunal, next one is before the high court. But PMLA does not have its own appellate tribunal, so we go and file our appeal cases before the appellate tribunal under Smugglers and Foreign Exchange Manipulators Act. Okay, so now just try to understand here. Suppose if the director under money laundering or the accused person, if they are aggrieved by the order passed by adjudicating authority. Aggrieved by the order passed by adjudicating authority means the attachment order. If any of them, either the director is aggrieved or the accused person is aggrieved by that order, or whenever the reporting entity is aggrieved by the order of the director, reporting entity, banks, etc. were aggrieved by the order passed by the director, then only in such cases we can go and file an appeal before the appellate tribunal within a time period of 45 days from the date of receipt of the order. If there is any sufficient reason, then there can be an extension beyond 45 days also, no problem in that. And appellate tribunal will take the final decision. It may confirm or modify or set aside the decision, the order which was passed earlier. Yes, and AT will try to dispose of this appeal as soon as possible, and will try to dispose of the appeal within a time period of 6 months from the date of filing the appeal. So appeal can be filed within 45 days plus any period extension, and appeal disposal should happen within a time period of 6 months. So the final decision making authority here is the appellate tribunal, and if we are still aggrieved by the order passed by the appellate tribunal, we can go for the final level of appeal, that is before the high court, within a time period of 60 days. Okay, that is within a time period of 60 days, and this time period can be further extended if there is any sufficient cause for another period of 60 days, and the final decision making authority is going to be the High Court here. Bus, full and final. After High Court, there is no possibility of going to the Supreme Court under PMLA. So only two levels of appeal. One is the appellate tribunal and the next one is your High Court. Very clear with this? And this appellate tribunal, just like your adjudicating authority, it also has the same powers as vested in a civil court. And appellate tribunal is basically, it functions in form of a bench. The decision is taken by the members of the bench. A bench consists of generally 2 members, and if there is a difference of opinion between these 2 members, then they will refer the matter to the chairperson of the appellate tribunal. But the basic funda is the decision should be taken by majority of the members of the appellate tribunal. And if we do not know how to represent the case before the appellate tribunal, then we can appoint any person called as authorized representative who can go and appear before the appellate tribunal. Very clear with this? Yes. Okay. Then the next court which is going to be there into the picture is your special court. Where have we seen the role of special court till now? Special court was coming into picture for passing the order of confiscation. Remember, confiscation order was passed by the special court. So what is the work of special court in this particular act? One thing that we had already seen is special court's work is to pass the confiscation order. And another thing, whenever that person was arrested, that person was presented before the special court within a time period of 24 hours. So all the cases of PMLA, imprisonment, fine cases, etc., all those cases will be tried, will be solved by the special court. Okay, so special court is not formed only for PMLA purpose. Special court is formed for other laws also. But for the purpose of PMLA, special court is going to handle the section 4 thing. That is, whenever the punishment under PMLA is given, remember how much was the amount of fine given under section number 4? It was of any amount, right? So that will be determined by whom? That will be determined by the special court. Similarly, what was the range of imprisonment given there? It was 3 years to 7 years, or it was 3 years to 10 years. So the final period of imprisonment will also be decided, or it will also be determined by the special court. Very clear with this? Okay. Then going ahead. Yes, this section number 45, as you can see here on the board. Can you see section number 45 here on the board? Mark section number 45 as very important in your book also, everyone. Can we go ahead? Okay. Section number 45. Section number 45. Offenses to be cognizable and non-bailable. Okay. Now, one thing that we had already seen there in section number 19, if I am not wrong, is arrest without warrant. Remember, I told you that director, deputy director, or any CG officer can go and do the arrest, and for that purpose, arrest warrant is also not required, right? Arrest warrant is also not required. Now, there are 2 terms given here. One is cognizable and the other one is non-bailable. Cognizable means arrest without warrant. Okay, see here it's written. Cognizable is nothing but arrest without warrant. We already know that whenever arrest happens under PMLA, for that purpose, arrest warrant is not required. And the next term given here is non-bailable offense. Non-bailable means what? Non-bailable offense is whenever that person is arrested, that person cannot be released on bail or bond. He cannot be released on bail or bond. Okay, this is the basic funda. This is the basic condition given under section number 45. But that person can be released on bail or bond in some exceptional circumstances. Those exceptions we are going to study in section number 45. So the basic 2 things is all the offenses are cognizable, means if that person is arrested under PMLA, he can be arrested without an arrest warrant. And second one is all the offenses are non-bailable. Non-bailable means that person cannot be released on bail except under some special circumstances. Now ma'am, what are those special circumstances where he can be released on bail? So first one is, if suppose we bring a public prosecutor and we take his opinion. If public prosecutor was involved and he has been given an opportunity to oppose the release, and if he says that this person should not be, if he says that this person should not be released on bail, then we will not release that person on bail. But if that person says that he should be released on bail, if public prosecutor says that okay, release this person on bail, then we can release that person on bail. If he says that no, you cannot release this person on bail, but the special court is still of the opinion that this person may be released on bail and he will not commit any new offense while on bail, then that person can be released. Means you are just giving an opportunity to the public prosecutor to listen to what he says, but the final decision making will be done by whom? Final decision making will be done by the special court. Okay, and in some cases, if the special court is of the opinion that if that person is of less than 16 years of age, if that person is sick or infirm, if that person is accused of sum involved of less than rupees 1 crore, if that person is a woman, then if the special court says so, then that person can be released on bail. Okay, releasing on bail does not mean releasing permanently. It is just releasing temporary for a shorter period. I hope I am very, very clear with this, everyone. Yes, so only in such exceptional circumstances, first one where the public prosecutor was involved, then that person can be released on bail, or in such exceptional circumstances that person can be released on bail. Otherwise, the person cannot be released on bail under PMLA. Very, very clear with this? Yes. So till here, a particular part of your chapter is done. Now going on to the last procedural part, penalties, punishments, etc. Those things are going to come into picture here. Now, while the offense of money laundering is happening, there is a high possibility that two countries or two or more countries are involved in the offense of money laundering. Whenever the other country is involved, that other country is called as the contracting state. Okay, we will not call it as the other country. Other country, I am just telling you for our understanding. We are going to call that particular other country as contracting state for the purpose of this chapter. Okay, so whenever, generally what happens is India enters into a treaty or India enters into an agreement, or the Indian central government of India enters into an agreement with such other country. Okay, and that other country is called as what? That other country is called as contracting state, with whom we enter into an agreement that we will enforce the provisions of PMLA in your country. Whenever any of our citizens does the offense of money laundering, we will share the information with you whenever required. You have to share the information with us whenever required, and all those things. We will allow investigation of cases in the respective countries whenever required. So basically, we are entering into a friendly agreement. We are entering into a friendly agreement with the other country, that is the contracting state, that whenever any cases of PMLA happens, then in that case, we will be able to enforce the provisions of PMLA in the other country as well. Okay, but when will we enforce these provisions? Only when there are any offenses of cross-border implications. Okay, whenever there are any offenses of cross-border implications. Ma'am, what do you mean by the term called as cross-border implication? Cross-border implication means where more than one country is involved. Example, whenever the offense has been done outside India, example, kidnapping has been done outside India, and the proceeds of crime has been transferred to India. The activity is done outside India, money is brought into India. This is an offense of cross-border implication. Or vice versa, where the offense has been done in India and the proceeds of crime has been transferred outside India, or we have tried to transfer the proceeds of crime outside India. Then in such cases, these type of offenses will be called as cross-border implications, where we will take the help of the other country, or where we will take the help of the contracting state. Where we will take the help of the contracting state to, what do we say? Enforce the provisions of PMLA. Or it can also happen that other country can seek help from India, and that is possible only because of this agreement. Right? Acha. Now, whenever any such offenses of cross-border implication happens, at that particular point of time, how do we share the information? There is a document called as letter of request. Okay, letter of request. Suppose if we want information from the other country, then we will issue the letter of request to the contracting state, and then the contracting state will revert back on that particular letter. Vice versa, suppose if they need our help, then we will receive the letter of request from them, and then we will share the information with the contracting state. I hope I am very clear with this. And similarly, because of this agreement, treaty with the other country, we will be able to do confiscation in the other country. We will be able to do attachment of property in the other country, confiscation of property from the other country. The accused person who is trying to hide himself in the other country, we will be able to bring back that person into India. This is possible only because of the treaty which India has entered into with the other contracting state. Very clear with this? Yes. Now a few punishments which are given up here, which we'll do it once. Now, one important punishment that we had already done, that was under section number 4, that was for punishment for the offense of money laundering. Now we have to do punishments under 2 sections. One is section number 62 and the other one is section number 63. Section number 62 talks about punishment for vexatious search. Whenever any authority under PMLA does search and seizure in our premises without the reasons being recorded in writing, then in such case that officer will be liable for imprisonment, which can go up to 2 years or fine up to 50,000 or both. Imprisonment or fine or both. Okay, imprisonment up to 2 years or fine up to 50,000 or both. Who is liable for this punishment? This punishment is coming on the officer who did vexatious, just for fun. He did some search without recording the reasons in writing. Okay. And similarly, suppose if someone gave false information about me, which led to search and seizure in my premises or which led to my arrest, someone gave false information about me purposely, then that person will also be liable for the same punishment. That is imprisonment up to 2 years or fine up to 50,000 or both. Very clear with this? Yes. And apart from that, this punishment is same. Officer also was liable for the same punishment, and the person who gave false information knowingly about me, for that person also the punishment is same. And the second part, now suppose if there is any particular person who was required to furnish some information, or if some person was required to sign any document and we refused to sign the document, or if I was summoned but I did not present myself before the authorities, then in such cases I will be liable for a penalty which can range between 500 to 10,000 for each default. 500 to 10,000 for each default. This is the penalty. This is not the punishment. This is the penalty which will be liable on the person who is not complying to the orders. Very clear with this? Yes. Okay, so these are your some important punishments, penalties, etc. that we have done in the chapter here. Now, whatever fine, penalty, etc. has been imposed on us, fine or penalty that has been imposed on us, we have to make sure that we pay it within a time period of 6 months from the date of imposition. 6 months from the date of imposition, and if it is not paid, then we can recover. Then the authorities basically can recover as per the income tax provisions. That is by attaching the bank account, selling movable or immovable properties, etc. So basically we have to pay it within a time period of 6 months. Yes, and the next thing here is offenses by the companies. See, we know that whenever we are held guilty under the offense of money laundering, we will be liable for punishment, right? We will be liable for punishment, that is given under section number 4, fine and imprisonment. Okay, apart from, now suppose if the offense of money laundering is done by an individual person, then fine and imprisonment is okay. But what if the offense of money laundering is done by a company? Then who will be liable there? Then the person in charge will be deemed to be guilty and he will be proceeded. Person in charge can be any directors of the company, it can be managers of the company, it can be secretary of the company, any particular person who is considered as the person in charge of the affairs of the company at the time when the offense was done. But if that person proves that it happened without his knowledge, he had exercised all due diligence to prevent that offense and all those things, then in that case, he will be excused and he will not be liable for the punishment. Okay, so basically in case of companies, etc., the person in charge will be held guilty of the offense of money laundering. Very, very clear with this. And what will happen? Suppose if the case of money laundering is going on, maybe the case is under appeal, etc., and if that person passes away, the accused person passes away, then the case does not get over, the case continues against the legal representative of that particular person. Suppose the accused person had filed an appeal before the appellate tribunal or before the high court, and during those 45 days or 60 days that person passes away, no problem, the appeal will not lapse, the appeal will be continued against the legal representative. Suppose if that person becomes insolvent, then the appeal will be continued against the official assignee or the official receiver. Okay, so in case of death, it will be continued by the legal representative. In case of insolvency, it will be continued by the official assignee or the official receiver. Very, very clear with this. So in case of, basically in case of death or insolvency, the case will not get over, the case will be continued. I hope I am very, very clear with this. Yes, so these were your important provisions. Okay, these were your important provisions under PMLA, the most important provisions which is relevant from your exam point of view also, which you have to mandatorily cover before your exams also. And yes, as you can see here on the board, all the important time periods, the appeal time periods, important penalties, chart, etc., everything is given in your book. Okay, everything is given in your book. Make sure that you make the full use of the things which are given in the book. And yes, at the end also, I have given the super quick revision charts or tables, we can say, of the important provisions of PMLA, which you can use for your revision purpose. I hope you are very, very clear with the PMLA chapter and you were able to revise along with me. Yes. Okay, so let's start with the next chapter, that is Arbitration and Conciliation Act 1996. Simple chapter, small chapter. Let's start with it. So, as the name suggests, Arbitration and Conciliation Act, basically arbitration and conciliation, these are nothing but the modern methods of dispute resolution, or we can say alternative method of dispute resolution. Right? Generally in India, we say that whenever there is any dispute between two people, they try to take the case to the court. Right? That was your litigation, that we can call it as, and that was called as your traditional method of dispute resolution. Now we have even got alternative method of dispute resolution, which can be other alternative methods of dispute resolutions are, it can be arbitration, it can be mediation, it can be negotiation, it can be conciliation. And out of these, the two most common methods of dispute resolution is arbitration and mediation. Okay, common methods are arbitration and mediation, but for the purpose of our syllabus in this particular act, we are going to study mainly about two things. One is arbitration and the other one is conciliation. Right? Now, what is the main purpose of this particular act? As the name suggests, that whenever any dispute arises between any two or more persons, then we are going to resolve the disputes not by traditional method but by alternative method of dispute resolutions. And this law contains the provisions relating to domestic arbitration, where all the parties are there in India, or it can even relate to international commercial arbitration. Commercial arbitration means related to your business disputes, and international arbitration means where at least one of the parties is of outside India. Provisions relating to these domestic arbitration and international commercial arbitration, these will be covered under this Arbitration and Conciliation Act. Okay, for the purpose of our exams, we are going to study mainly about arbitration, and then we are going to study some basic overview about the conciliation provisions also. Yes. Chalo. Now let's go to the main thing that where we are going to study about arbitration. So ma'am, what is going to happen under arbitration? Arbitration is such a method where two or more parties, whoever are there in the disputes, they submit their disputes to a neutral person called as arbitrator, who is going to give a final decision. Okay, as you can see here in the diagram also, party 1, party 2, they appoint a person called as arbitral tribunal, or this person can also be called as an arbitrator, and this person will adjudicate. Adjudicate means he will determine, and then he is going to give the final decision, and that decision is called as the arbitral award. Right, this is how basically the arbitration works. So basically we are, instead of going to the court, we appoint a person called as an arbitrator, who is going to be an independent, neutral person who is going to resolve our disputes. I hope I am very, very clear till here. Yes. Okay. Now going on to the next thing, that is basic features of arbitration. Okay. Basic features of arbitration. What is going to happen in this? What are the basic features of arbitration? So for arbitration, first most important thing that we require is the arbitration agreement. Okay. And now arbitration agreement is nothing but a documented agreement kind of a thing, where the parties show their desire that yes, if in case of a dispute we will not go to the court, rather we will come to the arbitrator to resolve the dispute. All these things are documented in a document called as arbitration agreement. Okay, that is the first primary thing that should be there mandatorily if we want to get into arbitration. Then there has to be a person called as arbitrator or arbitral tribunal, just like a court's judge, who is going to resolve the dispute. But yes, obviously, if we want a fair decision, then this person should be independent, neutral, unbiased, etc. And the next important thing here is, in case of arbitration, is party autonomy. Party autonomy is nothing but freedom. In arbitration, we have got the freedom to choose the seat of arbitration. Seat of arbitration means which legal proceedings will apply. Say for example, in case of international commercial arbitration, will Indian laws apply, or and will the Indian courts provide the supportive measures, or will the foreign law apply, etc. So we have got that freedom to choose whether we will take the supportive measures from the Indian government, or from the from the Indian laws, or from the foreign laws. We have got the flexibility, we have got the freedom to choose the arbitrator, number of arbitrator, then the place where we are going to sit and do the arbitration process, in what way, orally, written arguments, etc. In what way are we going to do the arbitration process? All these things will be specified. All these things will be specified. Will be decided by the parties themselves. So that's the reason here they have used the term, the feature called as party autonomy, where the parties themselves choose their own arbitrator also. What happens in case of courts, etc., is we don't choose our judge. The court decides, the legal system decides who is going to be the judge for this particular case. But here we choose our own arbitrator. We choose the date, time, place where we are going to do the arbitration, etc., which is altogether different from the basic litigation process. Right, then the arbitrator comes into picture, and then he is going to give the final outcome. That final outcome is called the arbitral award. Right, it is called as the arbitral award, which is the final decision which is given by the arbitrator. This entire process remains confidential, whereas litigation does not remain confidential. If whatever we study in form of case law, right, that is available to the general public, that is the litigation outcome, but the arbitration process entirely remains confidential. Right, and the final decision which is given by the arbitrator, that is called as the arbitral award, and the arbitral award is also enforced. It is made applicable in the same way, just like as if it is a court's decision. Just like whenever a court gives a decision, we, with all the seriousness, etc., we implement that court decision. Similarly, the decision, the award which is given by the arbitrator should also be enforced. Very, very clear with this? Yes. Okay, so these were some basic features of your arbitration. Now in India we have got something called as you have got this arbitration. In arbitration also we have got some involvement of courts. See, arbitration was done by the arbitrator, but whenever the arbitrator needs any help, or whenever we need some supportive measures from the legal system, we need the judicial authorities to interfere there. So for the purpose of arbitration, we have got two persons here mainly. One is the judicial authority, judicial authority is everyone. It includes the courts, it includes the special tribunals, it includes the quasi-judicial authorities, etc. Everyone is included in a term called as judicial authority. Now, ma'am, which courts will provide us the supportive measures? So just try to understand. For international commercial arbitration, only High Court is going to provide us the supportive measures. But for domestic arbitration, District Court and High Court both can provide us the supportive measures. Example, whenever we require the intervention of court in between, for international commercial arbitration, which court will come into picture? The High Court will come into picture. For domestic arbitration, it can be most of the times it is the District Court. Okay, suppose if we are not able to appoint the arbitrators, we were given the authority, we were given the freedom to appoint the arbitrators, but for some reason if we are not able to appoint the arbitrators, then in that case, for international commercial arbitration, we can go to the Supreme Court. For domestic arbitration, we can go to the High Court. High Court will come into picture. It will appoint the arbitrator in case of domestic arbitration. And so basically, most of the works, or we can say all the work, is done by the arbitrator only in the picture. But again, in litigation, we have court into picture. In arbitration, we do not have court into picture. But for some supportive measures, for taking some help, etc., we may require the help of some court. So we have got the District Court, we have got the High Court, and we have got the Supreme Court, who is going to help us for different things. And these courts, they are getting covered in the entire term called as judicial authority. Okay, it is going to be covered in the term called as judicial authority, right? Now, taking one thing at a time, remember, in the basic features of arbitration, the first and the most important thing that we require is the arbitration agreement. Okay, so we had seen that arbitration agreement is nothing but a document where the parties consent that if we want to go for, if there is any dispute, then we will go for arbitration. Right? That consent is recorded in the document called as arbitration agreement. Okay, that consent is recorded in the document called as arbitration agreement, and whenever any dispute arises, we refer to that document. If it is written in the document that yes, we will go for arbitration, then we cannot unilaterally proceed to the court. We have to go to the arbitrator for resolving the disputes via arbitration. Very clear with this? Now, arbitration agreement can be mainly in two formats. One is either in the main agreement itself, the arbitration clause can be included. Example, if there is a partnership deed made between the partners, in that itself we can include a clause called as arbitration clause. Even that will be considered as a valid arbitration agreement. Or alternatively, if we want to keep it separate, then we can prepare a separate agreement for it, where we will write that in case of any disputes, we will go for arbitration, right? But yes, arbitration agreement has to be in writing mandatorily. If it was decided over email, then a communication over email is also sufficient to make an arbitration agreement. Okay, so basically two types of arbitration agreement. One is your arbitration clause, the clause in the main agreement, and the other one is a separate agreement, which is also called as a submission agreement. Very clear with this? Yes. Okay, now going ahead to the general principles of arbitration agreement. This is very simple. Now, arbitration agreement is nothing but that written document or a contract which fulfills all the requirements of a valid contract. It should mandatorily contain the consent of all the parties who are there, because without consent, the agreement is going to be totally valid. And if once you have prepared the arbitration agreement, then a point called as ouster of jurisdiction becomes applicable. That is, if you have entered into an arbitration agreement, none of the parties can unilaterally proceed to the court. If, say, for example, two of them are there in the dispute, one of them cannot say, now, no, I don't want to go for arbitration, I want to go to the court. No. If you want to go to the court, you can go, but first cancel the arbitration agreement, then only you can go to the court. And even though your arbitration agreement, suppose if it is in the form of arbitration clause, what example had I given you for the arbitration clause? If the arbitration clause is there in the partnership deed, then also that document will be considered as a valid arbitration agreement, but there is a doctrine of separability. Arbitration agreement will be considered separate from the partnership deed. Even though it is contained in the main document, then too it will be considered as a separate contract. Okay, so that's why the arbitration agreement will rule on its own jurisdiction. It will not be dependent on the partnership deed. It will be considered as a separate arbitration agreement. Yes, so this was all about your general principles or basic features of your arbitration agreement. Now some more requirements for preparing a valid arbitration agreement. First thing is, obviously it has to be in writing. We have already discussed about it. It should mandatorily contain clear consent that all the parties shall go for arbitration. They shall go for arbitration in case of any disputes. Matters which are illegal, example, money laundering matters, can they be taken for arbitration? Answer is no. Bribery, kidnapping, murders relating matters, can they be taken for arbitration? Obviously no. Only legal matters can be taken for arbitration. Once the matter is submitted to the arbitrator for dispute resolution, the final award is given by the arbitrator. That is called as your arbitral award. And yes, obviously for taking any particular matter for arbitration, there should be a dispute. Okay, a dispute should be there. A dispute should be submitted for the arbitration. Either there should be a present dispute or there can be a possibility of future dispute. That's the reason we prepared that arbitration agreement. Signature, yes, it is definitely required in the arbitration agreement. If it is over email, then signature point is not mandatory, and the disputes which are submitted for arbitration should be arbitrable. Okay, it should be arbitrable. Means just like I told you, criminal offenses, these are not arbitrable. These cannot be submitted for arbitration. I hope I'm very, very clear till here. These are very basic and the general points which are there under arbitration. Now going on to the last two things. One is something called as arbitration agreement through reference. Okay, now in the arbitration agreement, we have written that or say for example in any particular partnership deed, say for example in the partnership deed, we have written that the disputes will be resolved as per the terms and conditions of any XYZ document. Disputes will be resolved as per the terms and conditions of the XYZ document. Example, it will be resolved as per the terms and conditions of the association. Say for example, if there is any clothes or clothes association or retailers association, then we have written in our document that the disputes, if any, will be resolved as per the terms and conditions of the clothes association. Then whenever any disputes arises, we will have to go and check the terms and condition of that association. If it is written in the terms and conditions of the association that disputes will be resolved by arbitration, then we can resolve the disputes by way of arbitration. Means it was not directly written in our document that whether we are going to go for litigation or whether we are going to go for arbitration. It was referred to some other document. Even that is considered as a valid arbitration agreement. Right? And the last one is termination of arbitration agreement or termination of arbitral agreement. Can it be terminated? Answer is yes. It can be terminated in 3 cases, and in one of the cases it cannot be terminated. How can it be terminated? First of all, it can be terminated by mutual consent of all the parties. If all the parties say now we don't want to go for arbitration, you can simply cancel it. Okay, or if the main contract has come to an end, suppose if partnership has come to an end, then what is the purpose of the arbitration agreement? Even that will come to an end. Or if suppose if the law says so, that this matter cannot be resolved or these disputes cannot be resolved by arbitration, then you have to cancel the arbitration agreement and the matter is going to go for litigation. Very, very clear with this. So these are the 3 ways: mutual consent, termination of the main contract, and operation of law. But in case of death of the parties, it will not be discharged, it will not be cancelled. In fact, it will be continued against the legal representative. Just like we had it in our PMLA chapter also, here also in case of death, it will be continued against the legal representative. Very, very clear with this. So this was all about your arbitration agreement. Everything about the arbitration agreement, right? Now, let's talk about arbitrator or the arbitral tribunal. Who is this particular person? He is either you can use the word arbitrator or you can use the word arbitral tribunal. It is used interchangeably but referring to the same person. He is just like a court judge who is going to listen to the disputes and who is going to resolve the disputes, and he is such a person who should remain fair and neutral to all the parties who are involved in the arbitration, because The quality of the final outcome depends upon the quality of the arbitrator. And he is such a person who should be capable of contracting, who should be capable of entering into a contract. He should be such a person to whom we are submitting the disputes. He is going to adjudicate the disputes and who is going to resolve the disputes. Very, very clear with this. Yes, what qualifications he should be having, what conditions he should be fulfilling, what number of years of experience he should be having, that will be specified by the arbitration regulations. We do not have that in our syllabus. Okay. You remember we had done one of the point in basic features of arbitration called as party autonomy. Yes, what did we study in party autonomy? Party autonomy was such a point where the parties had the freedom to choose their own arbitrators. So here the parties are going to choose their own arbitrators. How are they going to choose their arbitrators, or we can say how arbitrators will be appointed? What are the methods of appointing the arbitrator? Let's try to understand that. Okay, before that also, before choosing the arbitrator, let's decide how many arbitrators do we need. So here also the point called as party autonomy is applicable, where the parties have got high level of freedom to decide upon the number of arbitrators. In respect of number of arbitrators, if they want to keep one arbitrator, they can appoint one arbitrator. If they want to keep, say for example, 11 arbitrators, they can have even 11 number of arbitrators, depending upon their case and depending upon the decision taken by the parties. They can choose that how many number of arbitrators can be there in the case. See, if we have less number of arbitrators, time taken will be less, but expertise involved will also be less. If we have more number of arbitrators, then expertise will be more, but the clashes, disputes between the arbitrators will be more. So that has to be balanced by the parties themselves, that how many arbitrators are they going to appoint. And yes, one thing that the law has told is you can appoint whatever number of arbitrator, but that number should not be an even number. It should not be 2, 4, 6, 8, 10. Okay, it can be 1, 3, 5, 7, 9, that way, so that the decision can be taken by majority in case of any disputes between the arbitrators, right? This is what is told about the number of arbitrators in the law called as Arbitration and Conciliation Act. Okay, and suppose if you are not able to decide how many number of arbitrators is to be appointed, then in such a case you can appoint a sole arbitrator. A single arbitrator can be appointed in such a case. Okay, now ma'am, how do we appoint the arbitrator? What is the procedure for appointment of arbitrators? So we can say that the entire conclusion of the paragraph that is written here is one thing is both the parties can come together, they can mutually appoint a single arbitrator. Okay, that is one particular basic method of appointment of arbitrator. Okay, another method is one of the party will appoint his arbitrator, another party will appoint his arbitrator, and then these two arbitrators will appoint the third arbitrator. Okay, that is one thing. Third method is one of the parties will share a list of arbitrator with the other party. Other party will choose from that list of arbitrator. If he is not satisfied with this list of arbitrator, he will share his list of arbitrator with the first one. And this will go on till they choose a final arbitrator. And the last case, if they are not able to appoint the arbitrator, they will go and take the help of the courts to decide upon their arbitrator. Remember which court will come into picture? In case of domestic arbitration, High Court will come into picture, and in case of international commercial arbitration, the Supreme Court will come into picture. Either the courts will appoint or the courts will delegate this work to someone else, and they will choose the arbitrators for us. So this is the way in which the arbitrators are appointed for the purpose of this particular act. Yes. Okay. Now, what are the requirements? What are the requirements of this arbitrator? So he can be of any nationality. Generally, in case of domestic arbitration, that person will be an Indian only. But in case of international commercial arbitration, that person can be of any nationality, Indian or foreign. He should be capable of contracting, that is, he should be eligible as per the Indian Contract Act, and there should be no biasness. He should be totally neutral, he should be independent, there should be no biasness, because of which the final outcome is going to be the bestest one. Very clear with this? Yes, acha. When can we say that he is biased or he may be biased? Suppose if that arbitrator is related to either of the parties, or if he is having any interest in any of the parties, or he had any interest in any of the parties in the past, which can give doubts relating to independence, or which can give doubts relating to impartiality and all those things. Then in that case, we can say that that person is a biased person. Or say for example, he was the previous lawyer of either of the parties, he is a relative of either of the parties, he was having any financial interest in any of the parties, he was a legal representative of any of the party, or he has any financial interest in any of the party, then we can say that yes, biasness is present, and we should not be appointing any such person who is biased, or where we have a doubt that that particular person is biased. Right? I hope I am very, very clear till here, everyone. Yes. Okay. Now, duties and liabilities. Going to the next one, that is duties and liabilities of the arbitrator. This is very, very simple. Many of the pointers are getting repeated. Duties of the arbitrator. Obviously, what duty will the arbitrator have? He is given a work of resolving a particular case. So, he should conduct the proceedings without any delay, and he should try to resolve the case as soon as possible. While resolving the case, he should be unbiased. Right? He should remain impartial. He should not be favoring any of the parties. Right? He should not be favoring any of the parties, because that will again give rise to biasness. He should, as we have already studied in the basic features of arbitration, he should keep everything confidential, because in arbitration, whatever is decided remains between the parties themselves. Okay, and the most important work is he should be giving an award. He should give an arbitral award, that is the final decision, and it should be a reasoned award. He should give a proper reasoning why this award is being given. Right? And unilateral communication with one of the party, communicating only with one party, that should be avoided. Whatever documentation, whatever communication we are receiving from one of the parties should be communicated to the other parties. Right? It should be communicated to the other party, so that everyone is there in the loop, so that everyone knows what is happening in the case. Right? And it should ensure that whatever award is being given, that is complying with the legal requirement. The award which is being given, that should not be an illegal award. Right? He should not say that go and murder the other person. That is not a proper way of giving an award. Very, very clear with this? Yes. Okay, now once this arbitrator comes into picture, he will make sure that he fulfills his duties and all those things. Now, can this arbitrator be removed? Can he be substituted? Can he be terminated? Answer is yes. Either he can do it voluntarily. When the arbitrator himself says, I don't want to remain in this particular case, I want to leave, then it can so happen that without giving reasons also, with or without giving reasons, he can totally leave that particular case, and he can decide no longer to be an arbitrator. Or alternatively, parties say that we don't want you to be an arbitrator. Example, if he does not have proper expertise, or he has lost interest in the case, or when because of prolonged illness of the arbitrator he is not able to continue, etc., then in that case the arbitrator can be removed. Okay, or say for example, when the arbitration comes to an end, right, or if he is not able to give the final award within the prescribed time, then in such case the arbitration process automatically comes to an end. Right? Or alternatively, when the court decides, when we go and take the supportive measures from the court, and the court decides that yes, biasness is present. If biasness is present or independence is not there, then in such cases also the arbitrator can be removed. Very, very clear with this? Yes. So these are some of the reasons, or these are some of the ways in which an arbitrator can be removed. So we can classify it into two things. One is he can go voluntarily, or the parties can remove that particular person. Yes. Okay. Now listen. Another thing is, now the arbitrator came into picture. The arbitrator gave the award. Arbitrator is going to give the award. Award is nothing but the final conclusive decision which will be given by the arbitrator on all the matters which were submitted for arbitration. And the final award is basically called as the arbitral award. Right? Now, there is a possibility that either of the parties is not satisfied or is less satisfied with the award which is given by the arbitrator. So, if we are not satisfied, then we can go and file an appeal. Okay, we can go and file an appeal before the district court or before the high court. And this appeal can be filed within a time period of 3 months from the date when the award is received. And this 3 months period can be further extended by a time period of 30 days. This is a time period for going and filing an appeal. Okay, but there are only restrictive grounds. There are very less grounds on which we can go and file an appeal, because the arbitration is basically a friendly manner in which the dispute is resolved. So chances of any party not being satisfied with the award is very less. But suppose if later we come to know that the arbitrator was not appointed properly, or he was biased, or he was lacking independence, etc., then in such cases we can go and file an appeal. Right? Appeal can be filed before whom? Appeal can be filed before the district court or the high court within a time period of 3 months, and this can be further extended by a maximum period of 30 days. Very, very clear with this? Yes. And yes, before we even studied about the appeal of against arbitral award, you need to know that what are the types of arbitral award. Okay, types of arbitral award. One is the final award, which is given by the arbitrator, full and final on all the matters which is submitted for arbitration. That is nothing but your final award. Then there is something called as interim award. Interim award is one of the award which is given before the final award. Suppose we had submitted multiple matters for arbitration, and if we solving one by one, then the decision given on 1111 award will be called as the interim award, and the final one will be called as the final award. Okay, or anything which remains doubtful till the time the final award is passed, that award will be called as the interim award. Then there is something called as settlement award. Settlement award is such an award which is actually just decided by the parties themselves. Parties themselves decide that what is going to be the final award, and it is just supervised by the arbitrator. That's why it is called as the settlement award. Okay, decision is taken by whom? Decision is taken by the parties. It is just supervised by the arbitrator. And the last one is something called as additional award. Award given on the left out matters. Okay, suppose if after giving final award also the parties point out that the decision on so and so matter is pending, then in that case decision given on so and so left out matter will be called as the additional award. And for that, we parties can go and make a request within a time period of 30 days of final award. Means once we got the final award, from that day within 30 days we can go and make a request to the arbitrator, sir, so and so matter is left out, please give a decision on that, and that is called as your additional award. Very clear with this? Okay, so 4 types: final award, interim award, settlement award, and additional award. Okay, and award is such a thing which should be mandatorily, first of all, it has to be given by the arbitrator, and in arbitrator also, if you have multiple arbitrator, then it should be given by majority of the arbitrators. It should be in writing, it should be dated, and it should be signed by all the arbitrator. If some arbitrator is not agreeing, suppose if we had 5 arbitrators, 4 of them said yes, 1 of them said no, then that one would not sign it. If that one of them is not signing it, then he should be giving a reason that why he is not agreeing with the award. And the award, as we have already studied, it should be a deliberate award. It should be a reasoned award, that why such an award is given. It should be clearly written. It should not be vague. It should not leave doubts in the minds of the in the minds of the readers. It should be a possible award. It should be capable of being performed. It should be realistic in nature. It should not happen that go and bring stars from the sky. That kind of an award is not possible. And obviously it should be a legal award. It should not be an illegal award. It should not say go and kill the other person, matter will be solved, right? And it should not be against India's public policy. It should be a reasoned award. It should be given as soon as possible, as fast as possible. These are the requirements, right? These are the requirements of a valid arbitral award. Very, very clear till here? Okay. So till here, basically, we have seen about basic features of arbitration. Then we saw about arbitral agreements, right? Or arbitration agreement. Then we saw about arbitrator. Then we saw about arbitral awards. right? How an arbitral award should be, what were the types of arbitral awards, etc. Now going on to challenging the arbitral awards. As we had already seen, can we go and challenge the arbitral award? Yes. Before whom can we go and challenge the award? It can be challenged before the district court or before the high court within a time period of 3 months, which can be further extended by 30 days. This is what we studied, right? Yes, this is what we studied. 3 months plus 30 days. Within this much time, we can go and file an appeal. Now, I had also mentioned that arbitral award can be challenged only on some specific grounds. Only if later it is found that there was biasness done by the arbitrator, or if we came to know that later on we came to know that the arbitration agreement itself was invalid, or the party was incapable of entering into an arbitration agreement, or dispute was such which was not arbitrable, or legal requirements while giving the arbitral award were not followed. In such cases, or suppose if we, in case of international commercial arbitration, we come to know that the decision given was against the India's public policy, then in such cases we have to go and challenge that particular award. So the award can be challenged before the district court or the high court, as the case may be. When the matter goes to the district court or the high court, what can be the consequences of the same? So the order can be set aside. Means the court will say that no, the decision given by the arbitrator is nonsense, do it again. Next one is, it can confirm, it can say that the decision given by the arbitrator is perfect, or it can modify. The district court or the high court will itself modify the order. And the last one is, it may remit back to the tribunal. It may remit back to the tribunal means it will give it back to the tribunal to do some rectifications. Means it will not do the rectifications on its own, it will tell the tribunal, the arbitral tribunal or the arbitrator to do the rectifications. This is given here. That is consequences of challenge. Set aside, confirm, modify, or remit it back to the tribunal. And once the arbitral award is finalized, after that it has to be enforced. Enforced means to make it applicable. उसको implement करना, to implement that particular award which is given by the arbitrator as if it is a court's decision. Means we are not supposed to take it very lightly that this is of arbitrator, this is not of the court. You don't have to do that, right? So this is where your arbitration comes to an end, which was, very simple, very general pointers were getting repeated in the chapter. So just a simple reading of the chapter and solving the subjective questions from the question bank will help you to gain a good control or this thing over the chapter. Yes. Now going on to the basic parts of conciliation. We don't have the entire conciliation proceedings for our syllabus, but we have got the basics of it. Let's try to do whatever is there for us. Yes. Now just try to understand. First of all, arbitration was such a method. Arbitration was such a method where the parties took the dispute before a person called as arbitrator. Arbitrator resolved it and he gave an arbitral award. Okay, now we have got something called as conciliation. Again, this is an alternative method of dispute resolution where the parties go to a person called as conciliator, and by way of a confidential discussion, they are going to resolve their disputes. Okay, now, ma'am, what distinguishes between arbitration and conciliation? So just try to understand. Again, this is a voluntary process, means the parties may decide to go for conciliation. Alternatively, they can go for litigation, they can go for arbitration, or they can come for conciliation. Again, it is voluntary, it is not mandatory. The most important point of distinguish here is it is non-adversarial. Means in arbitration, what happens is we try to fight. Okay, the parties try to fight that I am correct, you are wrong, and that kind of a thing happens. But in case of conciliation, what happens is parties don't compete against each other. They resolve it in a very peaceful manner. They try to resolve their dispute in a very peaceful manner. They don't compete against each other and they don't try to prove that the other party is wrong. So in a very friendly manner, they try to resolve the dispute. And the work of the conciliator here is just to monitor the proceedings. The decision will be taken by the parties themselves. The work of conciliator is just to monitor. Just like the settlement award that we had done in arbitration, same thing is applicable in case of conciliation. Here the decision is taken by the parties and it is just monitored or supervised by the conciliator. Final award will be given in writing by the conciliator. That has to be legal, that will be binding, and throughout the process confidentiality will be applicable, that the matter does not go out. Just like arbitration was also confidential, and even this is going to be confidential. Very clear with this? Okay. And whenever conciliation is happening in India, provisions are given under Arbitration and Conciliation Act. Arbitration and Conciliation Act will be applicable, and Code of Civil Procedure 1908, this particular law will be applicable. Very, very clear with this, right? And whenever the parties wish to start the conciliation, one party will send the invitation to the other party stating that we have got so and so dispute, so let's take this matter for conciliation. One possibility is the other party will accept the invite, or the other party will reject the invite, and some reply, yes or no, some reply has to be received within a time period of 30 days from the date when we are sending the invitation. If the other party accepts the invitation within 30 days, then the conciliation process will start. If he does not reply, or there is a no reply, then they cannot go for conciliation. Okay, if suppose they plan to go for conciliation, then conciliators will be appointed. Conciliators will be appointed by the parties themselves. Same party autonomy is there, right? Or if they don't want to appoint a conciliator, they can go and make a request to the court, and the court can appoint a conciliator for them. Once a conciliator comes into picture, he will see all the documents, evidences, etc., and then he will start supervising or monitoring the entire process. Very, very clear with this? Yes. Now, if we want to cancel, or if we want to terminate the conciliation proceedings, it can be done. Either the parties can mutually sign an agreement where they will say that, okay, we are done. Okay, or we want to cancel the conciliation proceedings, that is done. That is one thing. Or when the conciliation award is given, at that time also the conciliation proceedings comes to an end. Very clear with this? Yes. So these are the two methods. Or even the conciliator can say that I don't want to handle this particular case, then also the conciliation proceedings will come to an end. And the final award which is given, by the conciliator here is called as the settlement agreement or memorandum of conciliation. Settlement agreement or memorandum of conciliation. What is going to happen? Why is it called as a settlement agreement? This is just like your settlement award. Here the decisions are taken by the parties. It is just supervised. It is just monitored by the conciliator. And that's the reason it is called as the settlement agreement or memorandum of conciliation. It has to be signed by the conciliator, mandatorily dated, signed, etc. And it has to be enforced. Okay, it has to be enforced as if it is a court's decision. Enforcement will always happen as per the Code of Civil Procedure Law. Okay, enforcement point we had studied for arbitration also. Same enforcement thing is applicable for conciliation also. And the last one, as we have already studied, just like your arbitration process was confidential, same way even your conciliation process is going to be confidential. This entire process can be has to be confidential mandatorily. So whatever things are discussed in conciliation cannot be used in the court of law later on, because whatever was discussed in conciliation has to remain in conciliation only. I hope I am very, very clear with this. Yes, these were the basic pointers of conciliation. And yes, one important term which is given here is, which we discussed in the beginning itself, that is international commercial arbitration, which is for disputes which are commercial in nature, and where at least one of the parties is either an individual of the other country, or it is a company of the other country, or it is any AOP or BOI of the other country, or it is government of the foreign country. One person who is of outside India, then such a case will be called as an international commercial arbitration. And just for your understanding, we have given distinguishes at the end of the chapter, which is there at the end of the chapter in your book, distinguish between litigation, arbitration, mediation, conciliation, etc., which you can just refer it once. Yes, so this is basically a very, very simple chapter, because many of the pointers are getting repeated here. And once you understand the concept, like what is arbitration, what is conciliation, what is an arbitration agreement, who is an arbitrator, what kind of award he gives, and if you understand that much, then you know the chapter becomes very, very simple. Yes. Okay. Let's start with the next chapter. that is Foreign Contribution Regulation Act 2010, along with all the amendments which are applicable. So in this particular law, the important things, two important terms that we're going to study. One is something called as foreign contribution, and the second one is something called as foreign hospitality. If we are receiving foreign contribution or foreign hospitality from the other country is nothing but foreign source in this particular chapter, then is it allowed, is it restricted, or what are the provisions applicable to it? All those things are going to be covered in this particular law, that is Foreign Contribution Regulation Act. Yes, let's start with it. Now, what is the purpose of this act, or why was this act incorporated? Now, they say that whenever we are receiving any sorts of foreign contribution, we will see the book definition of foreign contribution or foreign hospitality. Whenever we are receiving foreign contributions or foreign hospitality from the other country, in some cases it can be in good faith, but in some cases it can even lead to threat to the Indian economy, or it can even lead to threat to the Indian culture, etc. For that purpose, some foreign contributions are regulated. Okay, regulated means government will allow us to accept the foreign contributions from the other country, just that we have to do the reporting to the government. Okay, acha. In some cases it can so happen that if we are receiving any foreign contribution from our enemy country, then that can be for creating some disharmony in our country, that can be for some illegal activities in our country. So in some cases the government can even prohibit the acceptance of foreign contribution. So basic two purposes of the act: either it will regulate the foreign contribution or it will prohibit the foreign contribution, right? Now we need to understand first of all the meaning of the term called as foreign contribution, foreign hospitality. Let's first understand that. Foreign contribution, so one thing that you have to remember throughout the chapter is, in this chapter we are not giving any foreign contribution or foreign hospitality, we are accepting, we are only receiving. There is only incoming, there is no outgoing. Okay, so what all things are covered in the foreign contribution? Foreign contribution can be in any of the three forms. It can be in form of any article, that is anything. It can be in form of any currency, which can be an Indian currency or it can be a foreign currency, or it can be in any form of security, shares, debentures, etc., which can be Indian security or it can be a foreign security. So if you are receiving any, I'll just show it to you also. If you are receiving any thing from the foreign source, from the other country, which can be in form of article, currency or security, then that thing will be called as a foreign contribution. And foreign contributions can either be regulated or foreign contributions can be prohibited. Okay, one exceptional point which is there for the term called as article is when we receive any article for personal use. Okay, and if the market value of that particular article on the date of receipt does not exceed rupees 1 lakh, then that is excluded from the term called as foreign contribution. Only article which is received for personal use, whose value does not exceed rupees 1 lakh, will be excluded from the term called as foreign contribution. Okay, all these things we are receiving from whom? All these things we are receiving from a foreign source. Okay, so ma'am, what all things, who all will be covered in this foreign source? Foreign source will include the other country's government, it will include any foreign company, it will include the foreign government, it will include any corporation outside India, it will include foreign company, it will include MNCs, it will include any societies outside India, trusts outside India, it will include the foreign citizens, etc. Also, if we are receiving anything from the other country, that is called as the foreign source. And if we are receiving article, security or currency from the foreign source, then that is called as the foreign contribution. Very, very clear with this? Yes. And then there is something called as foreign hospitality. Now, what do you mean by the term called as foreign hospitality? Foreign hospitality is not in form of a tangible thing, it is in form of an intangible thing. Okay, it is in the form of intangible thing, it is in form of a service. If we are receiving a foreign hospitality, that is someone from the other country, someone from the foreign source is hosting me, is calling me to their country and telling that they will bear my travel expenses, they will bear my stay expenses, they will bear my medical treatment expenses, then in that case, that other person is providing me the foreign hospitality. Okay, can I say I am receiving here? Yes, incoming only, I am only receiving here, but that I am not receiving in form of a tangible thing, it is in form of a service where the other person is hosting me, other person is going to bear my stay, travel and the medical treatment expenses. That is called as the foreign hospitality. Okay, so two important terms, one was foreign contribution and the other one was your foreign hospitality. Very, very clear with this? Yes. Okay, so these were the most important things in definition that we had to do. One was foreign contribution, other one was foreign source, and the next one is a foreign hospitality. And yes, one more important point that you need to remember for the purpose of foreign source is United Nations, World Bank, International Monetary Funds. You must have heard about these associations, etc., agencies, etc., right? United Nations, International Monetary Fund, World Bank, etc. Their main work is to provide funding to the needy countries, etc. So if we are receiving anything from them, then that is not considered as a foreign contribution. Okay, so United Nations, IMF, World Bank are excluded from the term called as foreign source. It is written here. Okay, it is excluded from the term called as foreign source. I hope I am very, very clear with this. Yes. Now let's try to understand the provisions relating to foreign contributions first. Two most important sections that we have to do first here is section number 3 and section number 4. Okay, section numbers also to be remembered, section 3 and section 4. Section 3 talks about prohibition to accept foreign contribution, that so and so person, list of persons are given, so and so persons are totally prohibited from accepting the foreign contribution. Ma'am, who all are prohibited? So any election candidate or any person related to a newspaper company. It can be the correspondent, columnist, owner, editor, printer of a newspaper, because he can publish something against the country if he is receiving the foreign contribution from an enemy country, right? Or it can be a public servant, it can be a member of legislature, it can be any person who is related to any news channel, etc. It can be a political party, it can be a office bearer of a political party, a secretary of a political party, member of a political party, and all such people. So any people, did you see any people related to the government, any people related to politics, any people related to media, either it can be newspaper or audio or visual news, etc. Or even FM, broadcast of audio news, any person related to that, that is owner of a FM channel or editor or such people. So these people are altogether prohibited from accepting any foreign contribution, because they have told that if these people accept foreign contribution, then that creates a risk. Okay, that creates a risk for our country. Very clear with this? So they are altogether prohibited. And it should also not happen that, suppose if I am a non-prohibited person, if I am accepting foreign contribution, I cannot even transfer it to a political party. Means a political party, just example which I have taken from section number 3, a political party cannot directly or indirectly accept any foreign contribution. That is totally prohibited. Very, very clear with this? Yes. Okay. Then going on to section number 4, everyone with me. Section number 4 is basically talking about exceptions. Section number 3 said that so and so people cannot accept the foreign contribution. Section number 4 says that person to whom section 3 shall not apply. Means what are they trying to tell us here is the people who were even mentioned in section number 3, those prohibited people, they can accept amount from the foreign sources in these circumstances. They can accept. Example, if they are receiving anything called as salary or wages from the foreign source, or if they are receiving any payment in course of international trade or commerce, or if they are receiving any amount, important point, if they are receiving any amount from their relatives, they can accept it. However, when they are receiving anything more than 10 lakh rupees in a year, they have to inform to the central government within 3 months of the receipt. Okay, so even a political party office bearer can accept anything from its relatives, just that whenever the amount exceeds rupees 10 lakh, it has to intimate to the central government in form number FC1 within a time period of 3 months. Okay, or any amount which is received in ordinary course of business via normal banking channels, or anything which is received in the form of scholarship or stipend, etc., that can be received, no problem in that. I hope I am very clear with this. Yes. So section 3 was talking about total prohibition. Section 4 says that all these things can be received even by the prohibited people. Okay, now what is the logic? Because all the things which are written here in section number 4, these are actually not your foreign contribution. Salary, wages, amount received in international trade, etc. These are received from the foreign source, but this is not received for free. We would have rendered service, that's why we have received it. So that's why these are allowed. You can still accept it. Okay. But gift is one, this amount received from relative is one important point. This is received for no consideration. So when you are receiving it, there is no restriction on it, except that whenever the amount received exceeds 10 lakh rupees in a particular year from all the relatives taken together, then you have to intimate the central government that you have received. You can still accept it. You just have to intimate it to the central government that you have received. Very clear with this? Okay. So section number 3 and 4. Section number 3 and 4 is basically talking about foreign contribution. We have still now not spoken about foreign hospitality. Right. Now section number 6, which is going to come up here. Section number 6 talks about your foreign hospitality. Okay, now what was the meaning of foreign hospitality? Foreign hospitality was service received from the foreign source where the other person is ready to bear my stay expenses, travel expenses and medical treatment expenses outside India. Okay, so now what are they telling us here is whenever any particular person, specified year, that is, whenever these 5 persons are accepting any foreign hospitality, they have to take a prior approval from the MHA, Ministry of Home Affairs. This approval is required only for those 5 people: MLA, member of legislature, office bearer of a political party, government servants, judges, and government employees. Whenever these 5 people are accepting any foreign hospitality, they can accept, but only after taking prior approval of MHA. So ma'am, what about other people like you and me? We can definitely accept foreign hospitality without any approvals. Only approval is required for these 5 people. Okay, so what is the process for that? Whenever we want to take this permission, go and make an application to the MHA secretary in form number FC2. Attach the necessary documents, invitation letter, etc. and tell the authority that we require the permission. And you should take the permission at least 2 weeks before your departure. Means whenever you're going to leave India, before that at least 2 weeks in advance you have to take the permission. Okay, if the permission is granted to you, you can avail that foreign hospitality and you can go to the other country. Achha, it can so happen that I took the permission for stay expenses and travel expenses, and after going there was a need for emergency medical treatment. Then in that case, you can avail the medical treatment expenses first, or you can avail that medical treatment service first and then intimate the central government within 1 month of receipt, plus the manner in which it was received. Like from whom did you receive, how did you receive, intimate it to the central government within 1 month, and that intimation is also required only when the amount is 1 lakh or more. Only when the amount is more than rupees 1 lakh. If the amount is up to rupees 1 lakh, you need not even intimate the central government about this emergency medical treatment. I hope I am very clear till here, everyone. Yes. Okay. Then the next section, that is section number 7, very important because this was amended some time back. Section number 7 says that, you can see from the heading itself, prohibition to transfer FC to other person. If I have accepted the foreign contribution, then be it a registered person, be it an unregistered person under FCRA, I cannot transfer this foreign contribution to any other person under any circumstance. Earlier, there were certain circumstances where we were allowed to transfer the FC. But now they say that if you have accepted the FC, you only utilize the FC. Don't transfer it to any other person. Okay, earlier there was this provision that registered person can transfer to another registered person, but then there can be a possibility that we are transferring it to a prohibited person, we are transferring it to a political party, etc., which is not allowed. So they say that now transfer itself is restricted. If Arpita has accepted foreign contribution, Arpita only has to use that foreign contribution. Very, very clear with this? Yes. Okay. Then going ahead to the next section, that is section number 8. Okay, what is the section number 8 talks about? Section number 8 says that it puts certain restriction that whenever we have accepted any foreign contribution, we will not use the foreign contribution for speculative activities because there is a chance of losing the money. And we have received it for free. We have not paid anything for foreign contribution, so why to lose it? So they say that don't use it for speculative activities. Okay, maximum 20% should be used for administrative expenses. Balance has to be used for the main purpose for which we have accepted the foreign contribution. Example, if I have accepted the foreign contribution for using it for poor people or needy people, then maximum 20% should be spent for admin expenses for this charitable activity. Balance 80% should be used for the benefit of the poor people. Okay, and if you want to use more than 20% for admin expenses, please take the prior approval of central government. Okay, so these are the two most important restrictions. First one, speculative use for speculative activities not allowed at all. And administrative expenses, there is a cap of 20%. If you want to use more than 20% for admin expenses, take the prior approval of central government. Very, very clear with this? Yes. And then section number 9 is a one-time read kind of a section which says that CG has other powers also to prohibit receipt of FC. In section number 3, it had told that so and so people cannot accept foreign contribution. Apart from that also, CG can put restriction. And even for section number 6, remember CG had given restrictions for foreign hospitality, that those 5 people have to take first prior approval from the MHA, then only it can accept foreign hospitality. So apart from the restrictions given in section 3, 4, 6, apart from that also, if central government is of the opinion that sovereignty and integrity of the country is going to get affected, or public interest is getting affected, election process is getting affected, disharmony is getting created in our country, then central government can put restrictions and it can prohibit acceptance of foreign contribution and foreign hospitality. So basically they are telling that central government has got huge powers, and that is given in section number 9. Very clear with this? Yes. Okay. Then going on to the procedural part of the chapter, conceptual part of the chapter is over. Okay, now going on to the procedural part, what is given in section number 11? Section number 11 says that whenever any particular person wants to accept foreign contribution, that particular person has to accept a certificate of registration or a registration certificate from the central government. Whenever he wants to use the foreign contribution for cultural activities, educational activities, religious activities or social program, and he wants to accept foreign contribution. Example, I want to do charitable activities here in India for which I accepted foreign contribution donations. Then in that case, I need to obtain a certificate of registration from the central government. Okay, for that purpose, and one more thing, if you have not got the registration certificate, then make sure that you have at least taken the prior permission of the central government. See, registration certificate means it is going to be for some years, and prior permission is going to be just for that particular transaction. So first priority is registration certificate, but if it is a one-time thing, then you can even go for prior permission from the central government. Okay, for that purpose, go and make an application to the central government for registration certificate. Go and make the application in form number FC3A. Okay, FC3A along with a fees of rupees 10,000. And if you want to go for your prior approval, then you can go in form number FC3B along with fees of 5,000 rupees. Go and make an application to the central government for opening this particular account, or we can say for obtaining the registration certificate. And before obtaining the registration certificate, make sure that you have a FCRA account. This is just like your bank account, and then only go and make the application to the central government that you want to receive the foreign contribution. Yes, so either you can go for registration certificate or you can go for prior permission, but before going for both of these things, you should be having a FCRA account. That is mandatory. Okay, once your application reaches the central government will take a time period of normally 90 days, and within 90 days, it will either allow or reject you from accepting the foreign contribution. If it has allowed you, then well and good. If it has rejected, then it will communicate the reasons to the applicant that why it has not allowed you to open the to accept the foreign contribution. And if say for example the person who has made an application, if that person is a benami person, or he has been convicted of some offenses, or he was previously involved in some misutilization of funds, or if he has he's doing this for his personal benefit, or he has contravened any provisions of the act, etc., then in that case central government can directly say no for accepting the foreign contributions. Very clear with this? Yes. Acha, now once if the government says that okay, you are allowed, you can now accept the foreign contribution and we have granted you a registration certificate, then that registration certificate is going to be valid for a period of 5 years. Once granted, it is going to be valid for a period of 5 years. But if rejected, then you cannot make a second application for a period of 6 months. Cooling period of 6 months. If once rejected, you can make a fresh application only after a period of 6 months. Very clear with this? Yes. Okay. Then 5 years is there. Now what will happen after a period of 5 years? Now, after a period of 5 years, there can be a possibility that your certificate will obviously get expired at the end of 5 years. So, can we go and file for renewal of the certificate? Answer is yes. Okay. 1 second. I'll just show it to you here. We can go for renewal of the certificate at the end of 5 years. What they say here is wordings are a little different, but the conclusion here is renewal should be done in advance. That is during the last 6 months before expiry. Okay, if it is getting expired in December, then between the previous 1st July to 31st December, the application for renewal of certificate should be filed, and that application can be filed in form number FC3C. Okay, that has to be done in the last 6 months along with a fees of rupees 5,000, that is for renewal. If the central government is satisfied, it will provide you the renewal within a time period of 90 days, and the renewed certificate will also be valid for a period of 5 years. Suppose if you fail to do the renewal within the last 6 months, then you can do it in the period of next 1 year also, along with your late fee of rupees 5,000. And if you fail to do it even after the next 1 year, then after that your certificate will be cancelled and you'll have to go with a fresh application. Okay, so this was about your renewal certificate. Now another thing is something called as your identification document. Whenever you're going and making an application to the central government that you require this permission for FC, or you require the registration certificate for FC, etc., then in that case the government is going to ask you for some identification document and Aadhaar of all the persons associated. Example, if it is an individual person, then Aadhaar of that individual person. If it is a company, etc., then Aadhaar of all the office bearers and directors, etc., has to be submitted. And if someone is not having an Aadhaar, then the copy of passport has to be submitted as a identity proof. Okay. Now, if suppose the government is of the opinion that if central government is satisfied that there can be some grounds because of which the certificate can be cancelled, there can be some grounds because of which the certificate may be cancelled, and we are just doing the investigation, then for the time being the certificate can be suspended, okay, for a period of 180 days, which can be further extended by another period of 180 days. 180 plus 180 days. During these period your certificate can be suspended, and during suspension we cannot accept any new FC, right? And about the existing FC, you can utilize maximum 25%, that too after taking the prior permission from the central government. Means whenever the central government has a doubt on us that we are violating certain terms and conditions, then before cancelling, it can first pass an order for suspending the certificate. During suspension, we cannot receive any new FC, and with about the existing FC which is there with us, we can utilize maximum 25% of the unutilized amount, and the balance can be utilized only after revocation of suspension. Acha, after suspension, it can so happen that the central government may even cancel our certificate if we have violated the terms and conditions, if it was in public interest to cancel it, if we were defunct or dormant for a period of last 2 years, or if we have violated any terms and conditions of the act or the rules. Either we have violated the terms and conditions written in the certificate, or if we have violated the act or the rules itself, then in such cases, after giving a reasonable opportunity of being heard, our certificate can be cancelled. And once it is cancelled, then we cannot go for a new certificate for a period of 3 years. Okay, so here there is a cooling period of 3 years if your certificate has been cancelled. Yes. And the last one there is suspension of certificate, means surrender of certificate, means if we think that the purpose for which we had accepted the foreign contribution is over, and if we have utilized our foreign contributions entirely, then we can go and make an application to the central government that, sir, our work is done and we wish to surrender our certificate. Central government, after making all the inquiries etc., it may cancel our certificate, or it may accept the application for surrender of certificate. Very, very clear with this. And suppose if once our certificate has been cancelled or surrendered, and after that we have some unutilized FC kept with us, okay, then in such cases that FC is going to vest. That FC is going to vest in the central government. Means central government will give it to some particular person for its utilization, but now we cannot have that unutilized FC kept with us. Very, very clear till here. Yes, so this was about your fresh application for registration certificate, cancellation, surrender of certificate, cancellation of certificate, renewal of certificate, and surrender of certificate. Right? Those pointers are given up here. So till here, your basic procedures part, is done. Now let's go ahead to the last part of the chapter, which talks about accounts, audit, and all those things. So we had studied that before going and making an application to the central government for registration certificate or for prior permission, we have to open an account called as FCRA account. That FCRA account has to be in the branch of SBI at New Delhi. Okay. That has to be there. You can open only one account for receiving the foreign contribution. That has to be in SBI New Delhi branch. For utilization, either you can use the same FCRA account or you can open other accounts. That is only for utilization. For utilization also you can open in SBI New Delhi or you can open in any other scheduled bank. Okay. But for receiving you can have only one single FCRA account. And as soon as any particular transaction happens in that FCRA account, the banks will report about your transaction to the central government. You will report to the central government, that is different. And even the banks will report it to the central government that you have done so and so transaction, and that reporting is done almost real time, that is within 48 hours from that particular transaction. Very, very clear with this? Yes. Okay. Then going ahead, from time to time, we are required to submit various reports to the central government. Some reports will be talking about receipt of foreign contribution, copies of your income expenditure account, receipts and payments account, that can be for the entire financial year. Then you will be required to submit the annual returns. Then you will be required to submit the details relating to articles that you have received in the form of foreign contribution. You will be required to submit the statement of your bank account copy. Those are the procedural things that you will be required to submit to the central government. Okay. Now listen. First we discussed about opening of a bank account, that is your FCRA account. FCRA account, one account will be for receipt, which will be in SBI New Delhi branch. Then you can either use the same account for utilization of FC, or you can open separate multiple accounts for utilization of FC. Okay. Now that is for the bank account. Now let's talk about accounts and audit. Every person who is either registered under FCRA or who has obtained prior permission under FCRA, that particular person has to maintain separate set of books of accounts for FCRA transactions, in which he will maintain the full details of how much FC is received, how much FC is utilized, and all those things. Separate set of books of accounts should be maintained for that particular purpose, and for that mandatory every year audit is not required, but central government can conduct a special audit and a surprise audit into the books of accounts relating to this foreign contribution. That officer who is appointed for doing the audit can enter the premises after sunrise and before sunset for the purpose of doing the audit of your books of accounts. Very, very clear with this. So this was talking about your accounts and audit. Now, the next important thing here is, which is talking about the adjudication. Okay, next important thing here is talking about the adjudication. Now, suppose if we have received any foreign contribution, and if that foreign contribution is received in contravention, example, if you have received some article, currency or security which is in contravention of the law, then who will decide whether contravention has happened or not? Then that is generally decided by two persons, either by the session court or by assistant session judge. Session court or assistant session judge. Session court, assistant session judge will come into picture when the amount does not exceed rupees 10 lakh, and for all the other cases the matter will be handled by the session court. Yes, so these people will decide whether confiscation of the foreign contribution should be done or not. If it is a small matter, that is where the value does not exceed rupees 10 lakh, okay, then that will be decided by the assistant session judge. Otherwise the matters will be decided by the session court. Okay, now if the order is passed by the assistant session judge that yes, there is a contravention, and if we are not happy with the order, then in that case the appeal will be filed before the session court. If the order was passed by the session court, and if we are not happy with the order passed by the session court, then the appeal will be filed before the high court. And so the hierarchy is assistant session judge, session court and the high court. Okay, an appeal has to be preferred within a time period of 1 month. An extension of maximum 1 more month can be provided in such cases. Very, very clear with this. Okay, now whenever any order has been passed by the central government, say for example, central government had passed an order for not giving me the registration certificate, it rejected the registration certificate to be given to me, etc. And whenever the central government is of the opinion that there is a mistake in its order, it can do revision of the order on its own. It can do suo motu revision also, but that can be done only for a period of 1 year, only within a period of 1 year from the date of order. Very, very clear with this. So revision of order can be done by the central government. I hope I am very, very clear till here. Okay, then after that, the next thing which is coming up here is offences and penalties, which is not to be remembered for the purpose of this chapter. Offences by companies we have already done in the PMLA chapter, that whenever any offence has been done by any company in the FCRA chapter, then who will be liable as, who will be held as guilty? The person in charge. The person in charge will be held as guilty. But if he proves that it was done without his knowledge or he had exercised due diligence to prevent that offence, then he shall not be liable. Right? Achha. Then there is something called as compounding of offences. Okay, if there is any such offence which is done under FCRA which does not involve imprisonment, then we can go and make an application before the authorities that sir, please compound our offence. Compound our offence means please reduce our offence, please reduce our punishment. But if some person has again committed any offence within a time period of 3 years of the previous offence, today I have done an offence and within 3 years I have done similar offence, then for the second offence I am not going to get any compounding. If it was done, if it was repeated within a time period of 3 years. Yes, and then you have got some miscellaneous provisions coming up here which are just one-time provisions. And this was all about your FCRA provisions. So in this particular chapter, most important things is first of all the definition of your foreign contribution, foreign hospitality, foreign source. Okay, then section number 3, 4, 6, 7, 3, 4, 6, 7, 8. 3, 4, 6, 7, 8, these being your most important section which covers all the conceptual provisions. And after that you have to just go and see those procedural part, that is how to get a registration certificate, when can it get cancelled, when can it get suspended, and all those things. Okay, 3, 4, 6, 7, 8 being your most important conceptual sections for the purpose of this chapter. I hope I'm very, very clear till here. Yes. Okay, so let's start with the super quick revision of the next chapter, that is IBC 2016. Simple chapter, but a little lengthy chapter as compared to the previous chapters. Let's start with it. Now, in this particular code, Insolvency and Bankruptcy Code, we are going to study that suppose if a corporate person goes insolvent, if a corporate person becomes bankrupt, or if that person declares its bankruptcy, then what is the further process? What is the next thing that or the final resort that can happen in case of your insolvency and bankruptcy? Yes, so now you're basically you have got this code was introduced in Lok Sabha in the year 2015, and finally in May 2016 it had got the president's assent, and that's the time when this particular law had become a code. So this is one such particular stage. Insolvency bankruptcy is one such particular stage, or I can say insolvency is one such particular stage where a person's liabilities, a person's assets have gone down, it has gone down, and its liabilities have increased, and the person does not have sufficient assets to pay off its outside liabilities. That is the position, that is the stage when we can say that insolvency case has arisen. And when that particular person goes and makes an application to the authority declaring his insolvency, at that particular time we can say that this person has become bankrupt. Yes. Now, in case of corporate persons, when we talk about companies and LLP specifically for the purpose of our syllabus for paper 4, we have got insolvency only of corporate person. Corporate person includes your company as well as your LLP. Whenever these people are going for insolvency, there can be two resorts. Either that particular person can be revived. Okay, again we can revive, we can do the reconstruction of that particular person, and that particular company can again come into existence. Or if that does not work, then in that case the company goes for liquidation. Right. Now, what was the purpose? Now, before 2016 also there would have been definitely many companies and many other persons who would have become insolvent. But now what was the purpose of bringing this new code in the year 2016? So yes, they wanted to consolidate. There were many laws relating to insolvency. They wanted to consolidate all those laws, and they wanted to make a single law for this insolvency purpose. They wanted to amend the old stringent laws and introduce the new one. They wanted to fix a time period within which the cases should be resolved. Otherwise, we know that how the system works here. If a particular case comes up, it goes on for years and years. Then more priority or more preference has been given to employees and workmen. We'll see further in the chapter. And because of this, overall interest, because of this code, they have made sure that overall interest of all the stakeholders of the company is protected. And for some other reasons also, this particular code was introduced, and this distinguishes this particular code from the other codes. Okay, in other laws which were prevailing earlier, we had many authorities who were there into the picture. But when it comes to IBC, there is a single authority to whom we are supposed to approach when we want to go for the cases of insolvency and bankruptcy. Yes, so this particular code contains provisions for companies also, it contains provisions for individuals and partnership firms also, and it contains a procedural part also. Okay, what we have to study for the purpose of this chapter is mainly insolvency resolution and liquidation process for corporates. And whenever I am using the word corporate for the purpose of this chapter, it includes your company as well as your LLP. For the purpose of paper 4, you do not have insolvency relating to individuals and partnership. Okay, now we need to understand a few terms in this particular chapter in this IBC. Now in IBC, first of all, you have got a most important authority called as IBBI. Okay, first is IBBI. IBBI stands for Insolvency and Bankruptcy Board of India. Okay, within IBBI, you have got three more authorities coming up there. One is your IPA. IPA stands for Insolvency Professional Agencies. Insolvency professional agencies is nothing but it is just like your institute which regulate its members. Okay, similarly, insolvency professional agencies are formed, institutes are formed for promoting the looking after the professional growth of its members, for looking after the ethics which is to be followed by its members, or the code of ethics which is to be followed by its members, then to promote the services of its members. Okay, so IPA is basically an institute which is going to look after its members. Members of IPA is called as what? Members of IPA is called as IPs, that is insolvency professionals. These are those professional persons who are going to help us. Okay, who are going to help us to resolve the cases of insolvency. So the first person who comes into picture was your insolvency professional agency. It is the institute which is going to regulate its members. Members are called as what? Members are called as insolvency professional. So insolvency professionals plays the most important role, one of the most important role in this particular code, because insolvency professional are the people who are going to see whether revival is possible or not, or whether liquidation should be done, and during the insolvency process, how to manage the working of that insolvent company, how to run the business of that insolvent company. Everything will be done by this insolvency professional. Basically, these insolvency professionals clear the IBC examinations which are conducted by the IBBI. They clear the examinations, and after all those process etc., they get the designation of this insolvency professionals. Right, and then the last one is your information utility. Information utility is nothing but it is a centralized database. Okay, it is a centralized database which contains all the information about the defaulters, that is all the information about your persons who are insolvent. Okay, that information can be used by the banks, financial institutions before they provide loan. They can go and check from the centralized database whether this person's financial history is good or not, his credit history is good or not, should we advance him the loan or not. So all this information will be available from this document called as information utility. Okay, all these people come under whom? All these people come under the IBBI, Insolvency and Bankruptcy Board of India. Very, very clear with this? Achha, and now one of the most important persons here in the chapter is the adjudicating authority. Okay, adjudicating authority, as the name suggests, adjudicating is nothing but the person or the authority who is going to look after the cases of insolvency. See, when we say there was a professional person who was handling the cases of insolvency, that was your insolvency professional. But from government side, from the law side also, there has to be one authority, right? And that authority is nothing but the adjudicating authority. If suppose any particular person is considered as an insolvent, we know that we have to go and make an application to the adjudicating authority. No multiple authorities, no multiple windows, nothing. You just have a sole authority there, that is your adjudicating authority. Okay, now when we are talking about adjudicating authority for corporate persons, corporate includes your company as well as LLP. When we talk about adjudicating authority for corporate person, we have got the first level of authority is NCLT. Okay, if suppose you are not happy with the order given by the NCLT, then we can go and file an appeal before the NCLAT and then before the Supreme Court. Very clear with this? This is for the corporate persons, and for other persons, you have got the DRT, then the DRAT, and then the Supreme Court. This is your adjudicating authority to whom we are supposed to go and file a complaint. Okay, to whom we are supposed to go and file a complaint as soon as, or we have to go and make an application kind of a thing as soon as the case of insolvency comes into picture. Yes, and then they have given you, they have explained you, they have given you various provisions about the persons about whom we have just spoken, that is your IBBI. Then they have told you about insolvency professional agencies, then they have told you about insolvency professionals, and then about the information utilities, and then the adjudicating authority, about the same persons about whom we have just discussed now. So you can just read it once. Very clear with this? Yes. Now listen, now let's get into the process of the chapter. Now in this insolvency, basically, first of all, there is a person who is a defaulting person. Okay, there is a person who is a defaulting person, or we can say he has not paid the dues of the creditor. So this person who has done that default, that person is called as the corporate debtor. Okay, that person is called as the corporate debtor. He would have done default with his creditors. Creditors can be of two types. One is financial creditors and the other one is your operational creditor. Okay, financial creditor is a person to whom the financial debt is owed. Okay, and operational creditors is the person or the creditor to whom all the operational debt are owed. Yes, and the person who has not paid the money, that person is called as what? that person is called as the corporate debtor. Okay, the defaulter person is called as a corporate debtor. Now ma'am, so when will this IBC come into picture? What should be the amount of default if we want this IBC to come into picture? So amount of default, minimum amount of default is rupees 1 crore. Okay, the limit that is applicable for your examinations. When you go and check the bare law IBC 2016, there the limit given is 1 lakh rupee, but then central government has the powers to increase it up to rupees 1 crore, and this limit from 1 lakh to 1 crore was increased before, just at the beginning of your COVID. So now conclusion, for the purpose of your examinations, the minimum amount of default that should have been done to initiate IBC is rupees 1 crore. Very clear with this? Yes. So this is how or these are the persons who are there under your code. One is your corporate debtor who has done the default, then you have got your operational creditors, and then you have got your financial creditors. I hope I am very clear till here. Yes. Okay, now listen, who can start the process of insolvency? Okay, it can be, suppose if a default has been done with a financial creditor, let's say for example with a bank, means a bank has not got its money. A bank had maybe given a loan and the bank has not got the repayment of interest, or the bank has not got the repayment of principal, etc. Then the case can be started by, the insolvency process can be started by the financial creditor, or it can be started by operational creditor, example the sundry creditors, or the employees, workmen, etc. Or the case of insolvency can be started by the corporate debtor himself. Okay, for that particular purpose we have got 4 sections coming up, section number 7, 8, 9 and 10. Okay, we have got section number 7, 8, 9 and 10, which is to be remembered, which is very important, and which is to be remembered compulsorily. Section number 7 talks about initiation of CIRP by the financial creditor. CIRP stands for Corporate Insolvency Resolution Process. This process of insolvency can be started, as we have discussed, it can be started by FC, OC, or by the corporate debtor himself. Now, when a financial creditor wants to file a case for insolvency against a corporate debtor, this person will go and make an application to the adjudicating authority, and along with all the necessary information, proof of default, then he will also recommend a name of insolvency professional as IRP. IRP stands for Interim Resolution Professional, who will take ahead the cases of insolvency. Just like for a court case, just like we appoint a lawyer, same way here we are appointing a person called as interim resolution professional. All these things he will go and submit it to the adjudicating authority, that is to the NCLT, and NCLT will consider your application and it will reply. It has to check. It will take a time period of 14 days, and within 14 days it will determine whether there is a default or there is no default. If there is a default, then it will accept the application. If there is no default, then it will reject the application, and if there is a defect in the application, then it will give us a time period of 7 days to rectify it, and depending upon that, the application can be accepted or it can be rejected. I hope I am very clear with this. Yes, so FC, in this section number 7, who is going to whom? FC is going to the adjudicating authority against the corporate debtor. Similarly, who else can go and file and make an application? Application can be filed even by the operational creditor. But in that case, we have got 2 section numbers coming up, section number 8 and section number 9. One extra process is given in section number 8. What is that extra process? Let's try to understand that. In section number 8, operational creditor. Operational creditor, before he is going and making an application to the adjudicating authority, he will go and submit a demand notice, a final demand notice to the corporate debtor, where he will give a time period of 10 days to the corporate debtor to reply and to make the payment. Okay, that I am giving you final 10 days notice. Please make sure that you clear all the payments within this time period of 10 days. And if you fail to do the payment within a time period of 10 days, then in that case, I will proceed to the adjudicating authority and initiate the CIRP, initiate the corporate insolvency resolution process against you. Now, depending upon the fact whether he replies, whether he does the payment or not, depending upon that, the case can be started. Suppose if we say that at the end of 10 days there was no reply received and there was no payment received, then in that case operation creditor can proceed and it can go and file an application before the adjudicating authority for initiating the CIRP. Again, he will submit the copy of proof of default, copy of invoice, copy of demand notice which we had just now issued to the corporate debtor, and it may suggest a name. It may suggest a name of the interim resolution professional. Now here I use the word may, means it is not mandatory for the operational creditor to suggest the name of the IRP. In case of financial creditor, it was mandatory for the FC to suggest a name of the interim resolution professional. Very, very clear with this. Now the matter reaches whom? Now the matter reaches the adjudicating authority. Again, same. AA will take a time period of 14 days to ascertain the default. If there is a default, then the case application will be admitted and the CIRP will be started. If the application is rejected, then we will be getting a time period. We will be getting a time period of 7 days to rectify the application, and then accordingly on the basis of the fact whether you have rectified the application or not, depending upon that the application can be accepted or rejected. I hope I am very, very clear with this. Yes, then we go ahead to the next one. That is section number 10, where the application is done by the corporate debtor himself. The person who himself was insolvent, he goes to the adjudicating authority and says that, sir, I have done a default with either FC or OC and I will submit all my documents relating to books of accounts, financial statements, how much amount of default I have done. Then I will even pass a special resolution where maximum of the shareholders are approving the fact that yes, you can go to the adjudicating authority for initiating the CIRP. Once the application reaches the adjudicating authority, again the process remains the same. AA will take a time period of 14 days. AA will take a time period of 14 days to ascertain the default, and then depending upon that it will either accept or it will reject the application. And here also the person who is making an application, that is the corporate debtor has to make sure that it suggests a name of the interim resolution professional. So in case of financial creditor and in case of corporate debtor, it is mandatory for the applicant to give a name of the IRP, whereas in case of operational creditor, it was not mandatory. Okay, it was not mandatory for the operational creditor to suggest the name of the interim resolution professional. I hope I am very, very clear till here. Yes. So till here your basic conceptual part, some conceptual part of going and making an application to the adjudicating authority comes to an end. And now just try to understand the date when the application is admitted. The date when the application is admitted by the adjudicating authority, that is the date when your CIRP commences. CIRP stands for Corporate Insolvency Resolution Process. That is the day when the CIRP starts. I hope I am very, very clear till here. Yes. Okay. Okay, so once the application has been filed under section 7, 8, 9 and 10, let's move ahead to the other provisions. Now, once the application is filed, we just discussed that the day on which the application is admitted or the day on which the application is accepted by the adjudicating authority that yes, there was a default, that is the day when the CIRP commences, right? Now, once the CIRP commences, there is a particular time period within which the CIRP should come to an end. Okay, the time limit for completion of the process which is given under section number 12. Now they say that the day when the CIRP commences, from that day within a time period of 180 days. Okay, within 180 days the CIRP should come to an end. And later we will study that suppose if a resolution has been passed by the COC, Committee of Creditors, about which we will study subsequently. If a resolution has been passed by COC with a voting of at least 66%, then we can get an extension of further 90 days, and that is going to be a one-time extension. So 180 days plus 90 days, this is the maximum time period within which the CIRP should come to an end. And then there was an amendment some time back that suppose if any legal proceedings were going on against the corporate debtor, that is against the defaulter person, then there can be a delay in completion of the CIRP. Then in such cases, the CIRP should be completed within a total period of 330 days. Okay, so if there are no legal proceedings, then it has to be 180 days plus 90 days. And if there are legal proceedings, then the CIRP should be completed within a time period of 330 days. This is the time period for completion of the CIRP. Okay, now once we have made an application, either the FC or the OC or the corporate debtor, once they have made an application, then the application can be withdrawn. First option is AA has not yet accepted our application, so we can withdraw it before that by making an application to the adjudicating authority, because till now it has not accepted it, so we can still go and make an application to the AA that, sir, we wish to withdraw our application, so our application can be withdrawn. Or suppose if my application has been admitted or has been accepted by the adjudicating authority, can we still withdraw the application which we had made? Answer is yes, we can. Suppose if by that time the COC was not formed, AA accepted our application but COC was not formed, so we can again go and make an application to the AA to withdraw the application. If COC was formed, and if now we want to withdraw our application, then in that case the withdrawal application should be approved by 90% of the COC. Okay, just like for extension of time period we require 66% voting share, for withdrawal of application after the COC has been formed, we need approval of 90% of voting share. Very clear with this? Yes, so this is how the application can still be withdrawn even if the application was admitted by the adjudicating authority. Okay, now once the application is admitted, after that 3 things will happen. Okay, first thing, a moratorium will start, then the IRP will be appointed, and then a public announcement will be done. Okay, so let's do it one by one. First of all, what happens in moratorium, or what do you mean by the term called as moratorium? In moratorium is nothing but a calm period. Okay, a calm period of 180 days is declared. That 180 relates to the same time period of 180 days, and during this period all the legal cases, suits, proceedings, etc. will cease. It will stop during this particular period, so that we will give time to that corporate debtor, will give time to that defaulter to resolve its status. But during this particular period we cannot go and file, means the corporate debtor cannot file a case against anyone else cannot come and file a suit against the corporate debtor. Enforcement of property, enforcement of security interest in the property, example, any property is kept as mortgage with the bank, it cannot enforce that particular security interest. If I have occupied any property as a lessor, on lease, then in that case that person cannot ask me to vacate the property if I am paying the rent, etc. continuous regularly. But the supply of goods and services, if we are doing the payment for that cannot be terminated during the moratorium, and normal business operations can go on. Okay, normal business operations can go on during this moratorium period. So legal cases cannot be we cannot initiate against anyone else cannot do it against us. We cannot sell off our property. Interest in the asset cannot be enforced, security interest cannot be enforced, but business can go on during this moratorium period. And this moratorium period is basically valid till the time the CIRP is going on. Okay, generally we say that moratorium period is going to be for 180 days, but if my time period for completion of CIRP gets extended, then even my moratorium is going to get extended. Okay, so moratorium gets implemented right from the day when the CIRP commences. Then after that, as soon as moratorium starts, after that we appoint the adjudicating authority appoints the IRP, that is interim resolution professional. You remember in financial creditor and in corporate debtor we had to compulsorily suggest a name of the IRP. So the person whose name was suggested as IRP in the application made under section 7 and under section 10, that person can be appointed as the IRP if there are no disciplinary proceedings going on against that particular person. Okay, and if OC has also suggested a name, then we can also appoint that particular person as the IRP. But if OC had not suggested any particular name, then in that case AA will go and make a reference to the IBBI for recommending the IRP's name, and IBBI will recommend a name within a time period of 10 days against whom there are no disciplinary proceedings going on. So this is how your IRP is appointed. And as soon as IRP comes into picture, the first thing that he does is within a time period of within a time period of 3 days from the date of his appointment, he is supposed to do a public announcement informing the general public that CIRP has started against so and so corporate debtor. I am the IRP for this particular case. Then whosoever money is yet to be received from this corporate debtor, please submit your claims with us, and if you submit any false claim, then you will be liable for penalty for that particular case. And this public announcement will be given by the IRP within a time period of 3 days from the date of his appointment, right? Then the IRP, now the IRP comes in. Now the IRP is there. He starts collecting the claims from the general public, whosoever money is due. Then he starts taking the control of affairs of business of the corporate debtor. He will start managing the business. He will exercise the powers which were earlier there with the board of directors. He will now deal with the financial institutions of the corporate debtor, etc. Okay. Now the first thing that he will do here now is he will constitute a COC. Okay, he will constitute a COC. COC stands for Committee of Creditors. Committee of Creditors, as the name suggests, it is going to have your all your creditors. But as per your IBC, Committee of Creditors is mainly going to have its financial creditors. Okay, if financial creditors are there, then all the financial creditors except the related parties of the corporate debtor will form part of the COC. Okay, if there are no financial creditors, or if all the financial creditors are related parties, then in such a case, 18 largest operational creditors plus one person representing the workman plus one person representing the employee, all these people will be coming and sitting in the Committee of Creditors. Okay, this is how mainly this is how your COC is formed. Now, once the COC is formed, the main purpose of first of all forming the COC is, as soon as the COC is formed, then within a time period of 7 days from formation of COC, the first meeting of COC is conducted. Okay, this first meeting of COC is called by the IRP. Notice of this meeting will be given to all the members of the COC. It will be given to the ex-management of the corporate debtor, even though they come or no, that is not relevant, but we have to give them the notice that yes, this is the first meeting of the COC. Then you will be giving notice even to the large operational creditors whose debt is more than or equal to 10% of the total creditors. And these are the people, basically these are the people who can come and sit in the first meeting of the Committee of Creditors. And whenever there is a meeting of Committee of Creditors happening, there has to be a quorum of 33% of the COC. Even if ex-management does not come, that's absolutely okay. But for a proper meeting, there should be a quorum of at least 33% of the COC. If quorum is not there, then the meeting gets adjourned to the next day. Right? Now, in this first meeting of the COC, the main purpose of calling this first meeting of COC is to appoint the RP. Okay, this IRP can also be appointed as the RP if he gives his consent, and if there is a voting of at least 66% by the COC, then this IRP can also be appointed as the RP. If we don't want to appoint the same person as the RP, then we can go and take a name recommendation from the IBBI and we can appoint a new person as the resolution professional also. So basically here appointment of RP is happening. Either the IRP get converted, or he can get appointed as the RP, or we can appoint a new person as the resolution professional. Are you very clear with this? So now basically IRP is gone from the picture. Now you have got a person called as RP who is there. Now he will start with the work. Okay, now what is the main work? What was the main purpose of the chapter? Main purpose of the chapter was to resolve the corporate debtor, to convert him, we can say that, to make some plan by which his insolvency position can improve and now he can start doing his business. So now RP is there in the picture. He will take all the handover of documents from the IRP if it was a different person. It will take the control of books of accounts. It will now talk to the financial institutions. It will now discuss the matters with the COC, and then it will do the appointment of persons called as resolution applicants. Okay, these resolution applicants are some persons who has to fulfill the criteria as given under section number 29A. Example, that person himself, resolution applicant, should not be an insolvent person, he should not be a willful defaulter, his account should not be classified as NPA, he should not be convicted of any offenses and all those things. So resolution applicant is such a person with mastermind who is going to prepare or who is going to suggest some plans, and that plans is called as the resolution plans. So plan is not prepared by the resolution professional. Plans are actually prepared by the resolution applicant, that is by the mastermind people. But for preparing the plan, can we say that RP needs some knowledge? Right? For preparation of plan, RP needs some knowledge. RP as well as your resolution applicant needs some knowledge. So RP is going to prepare a document called as information memorandum, which contains all the important information about the corporate debtor. It is going to prepare that document called as information memorandum, and it will share this information memorandum with the resolution applicant, on the basis of which the resolution applicant is going to prepare the plan. Right? Now, resolution applicants can be one person also, it can be multiple persons also. They will submit their plan to the resolution professional. Resolution professional will check whether all the legal requirements have been followed, whether payment to all the types of creditors have been considered in the plan, whether the plan is a feasible plan or not, etc. So, RA, resolution applicant, submits the plan to the RP. RP does a check of it, and then if RP likes the plan, he will submit it further before the COC for its approval. If COC likes the plan, they can approve it by a voting of at least 66%, and once it is approved by the COC, then it has to be submitted to the adjudicating authority, and if adjudicating authority likes the plan, then the plan gets approved and the CIRP comes to an end. Okay, till the time the plan is with the COC, you can make multiple plans. Okay, till the time it is there with the COC, you can make multiple plans, you can refer it back to the resolution applicant to reconsider it, etc. But once it is submitted to adjudicating authority, there is no going back. If AA approves, then the plan is approved. Okay, means insolvency resolution has insolvency resolution has happened. But if the plan is rejected by the adjudicating authority, then that is going to lead to liquidation, because there is no going back to the resolution applicant. So before you submit the plan to the COC, you have to be very, very careful. You have to be very, very careful that your plan is a foolproof plan. Very, very clear with this? Yes, so now the plan goes to the adjudicating authority. If AA thinks that yes, everything is proper, then in that case, AA will approve the plan, and it will be binding on everyone. It will be binding on the corporate debtor, its employees, members, creditors, stakeholders, everyone. Very, very clear with this? Acha, on some circumstances, suppose if the plan was in contravention of any law, or there was some irregularity which was done by the resolution professional, or if debt of OC, operation creditors, is not considered, etc., then in such cases, we can still go and file an appeal before the NCLAT, because the adjudicating authority was the NCLT. If we want to go and file an appeal, then we can go to the NCLAT. Very, very clear with this? Achha, suppose what if the plan was rejected? What if the plan was rejected by the adjudicating authority? Then in that case, it will lead to liquidation. What if we could not submit a plan within 180 days plus 90 days? Then also we could not complete with the CIRP process. Then in that case, even that will lead to liquidation. What if COC with a voting of 66% says that let's liquidate? We required the 66% voting for approving the plan, but what if they say that with a voting of 66%, let's liquidate the corporate debtor? Then we have to liquidate the corporate debtor if they are of the opinion that there is no point in continuing this particular corporate debtor. Right? In such cases, it will lead to liquidation. Okay, now when we go for liquidation process, first of all, adjudicating authority will pass an order for liquidation of the corporate debtor. Now the COC will dissolve, COC will come to an end. Okay, whatever powers were there with the management, ex-management, that will now come with the liquidator. So ma'am, who will be the liquidator here? Either the same RP, who was doing the CRP process, that person can be appointed as a liquidator, or we can take a new name from the IBBI who can be appointed as a liquidator. Very clear with this? So now liquidator will come into picture. He will exercise his powers, he will fulfill his duties, he will start verifying the claims of the creditors. He will take the custody of all the assets and properties. He will invite and settle the claims of the creditors. He will investigate into the matters. He will, check. He will do the valuation of the assets. He will defend the cases on behalf of the corporate debtor. Whatever thing was supposed to be done by the board of directors will now be done by the liquidator. Right? Acha, now then he will prepare something called as liquidation estate. Liquidation estate is what? Liquidation estate is basically a pool of all your assets. What all things can be taken in the name of corporate debtor, what all things will not form part of the liquidation estate. So any asset over which we have an ownership right, that will be included in our liquidation estate. Right? Any asset which is kept in our possession but the ownership does not belong to us, that cannot form part of the liquidation estate. Any amounts which were payable to the employees as a part of pension gratuity, that cannot be sold. Very clear with this? Yes. Then any asset which was given as collateral to the creditors, over which the creditors have relinquished their rights, that now belongs to the corporate debtor, that will be considered. Right? And all the other proceeds of liquidation over which the corporate debtor has ownership, that will be forming part of your liquidation estate. Okay, but the personal assets of the shareholders, personal assets of the partners of the corporate debtor, these cannot be considered as a part of liquidation estate, because as you know, company is a separate company, and LLP both are separate legal entities, right? If both are separate legal entities, then we cannot attach the assets of the shareholders and the partners of the LLP, shareholders of the company or partners of the LLP. Very, very clear with this. Okay, now liquidator, once he prepares the liquidation estate, after that liquidator will collect the claims. As soon as the liquidation process starts, he will start collecting the claims. He will verify the claims. If any creditor wants to alter the claims or withdraw his claims, he can do that. And then liquidator will finalize that finally how much amount of money is to be paid to which category of creditors. Right? Now it's time that we need to make the payment. We need to start making the payment to our creditors. For that, first we will go to the secured creditors. Okay, secured creditors who are having some asset with them. So secured creditor, first option is secured creditor can relinquish. Secured creditor can relinquish his security interest. He will say, take my asset and give me my money. That is one option. Alternatively, we will tell to the secured creditor, you keep the asset with yourself, and if there is any surplus, you give us the money, and if there is any deficit, then the liquidator, that is, we will pay you the money. So these are the two options given to the secured creditor. Do you want to relinquish the secured security asset, or do you want to keep it? Now, once all these things are done, after that comes the most important thing. I'll just show it to you. After that comes the most important thing, that is distribution of assets, which is given in section number 100 and which is given in section number 53. Okay. Now, how does this distribution of asset happens? That has to be done in a particular sequence. 8 points to be remembered there. First of all, we will pay the insolvency and liquidation process cost in full. Okay, after that, at the second level, two things will be paid in pari passu or equally. One is workmen dues for the last 24 months, and the next one is secured creditors who have relinquished their securities. These two people will be paid equally at the second level. Then we will pay the wages and other amounts to the employees, wages and other dues to the employees for the last 12 months. Above was your workmen dues, here it is basically to the employees. Then at the fourth level, we are going to pay to the unsecured financial creditors. At the fifth level, again two people will be paid equally. One is to the government for the last 2 years, and the other one is secured creditor in case of any deficit. Then comes your other creditors, then your preference shareholders, and then your equity shareholders. This is the sequence. This is the sequence in which the payment should be done to the in case of liquidation. Right? Once the assets have been completely liquidated, after that liquidator will go and make an application to the adjudicating authority that, sir, please pass an order for dissolution. The day when the order is passed by the adjudicating authority, that will be considered as the date of dissolution, and then we will forward the order will be forwarded to the authority with whom we are registered. Example, it will be forwarded to the ROC within a time period of 7 days of the order. Okay, and this is how your liquidation process comes to an end. I hope I'm very, very clear. So suppose if the plan was approved within that 180 days plus 90 days or within 330 days in case of legal proceeding, then well and good. But if it could not be done, then in that case, it will lead to liquidation. Very, very clear with this? Yes. Okay. Now going on to the next two standalone topics which are there under your IBC. First one is your fast track CIRP. Now what is going to be there in your fast track CIRP? Fast track CIRP is just one additional process, one additional option which is given in case of some corporate debtors, some small corporate debtors, in which we can go and make an application for CIRP and the process will be speeded up. Okay, now first of all, it is going to be applicable in case of which corporate debtors. So first of all, it has to be a small company. If the corporate debtor is a small company, or if corporate debtor is a startup company, a startup other than a partnership firm, or if it is an unlisted company whose total assets does not exceed rupees 1 crore. If these small corporate debtors are there, means small defaulters are there, then against them, fast track CIRP can be initiated by the financial creditor, operation creditor, or by the corporate debtor by making an application to the adjudicating authority along with the proof of default and such other information. If fast track CIRP is initiated, it is not mandatory, but if we go for fast track CIRP, then it has to be completed within a time period of 90 days, plus it can be extended by a further period of 45 days if COC approves it by a voting of 75%. And again, this 45 days extension is going to be a one-time extension. Very, very clear with this? Yes. So fast track CIRP, it is not mandatory, but if the corporate debtor falls under those criteria, under this particular criteria, then we may go for fast track CIRP. Very, very clear with this? Yes. Okay. Then going on to the next one, that is your voluntary liquidation of corporate persons. Okay, voluntary liquidation of corporate persons. Now, your corporate persons means we are specifically talking only about companies. First of all, if a company wants to liquidate itself in cases of other than insolvency, okay, whatever we have been studying till now, here we have been discussing only about insolvency cases. Here, normally, if any particular company wants to close itself down, then it can do so under section 59 of the IBC. And there is a particular process given for that. If we want to initiate this voluntary liquidation, then a declaration should be submitted from majority of the directors that they have inquired into the full state of the business affairs of that particular corporate person, and the company is not and the company is a solvent company and it is not getting liquidated to defraud any particular person. Means we are here, the most important thing is the person who wants to get voluntarily liquidated should not be an insolvent person. It wants to close down for cases other than insolvency. Along with this declaration, we have to attach the audited financial statements for the last 2 years, and we have to take a report from the registered valuer showing that see, these are the valuation of assets and liabilities and our company is a solvent company. Right? Now, once you have taken the declaration from majority of the directors, from that day, within a time period of 4 weeks, we have to pass a special resolution that has to be passed by the members of that particular company that they simply want to close down the business operations, or a resolution has to be passed by the members of the company that the period which was mentioned in the AOA of the company has got over now. So that's the reason we want to close down our company. Or suppose if AOA had provided some other condition or some other event that on happening of this particular event, the company will dissolve, and now that event has happened, then we have to write there that okay, so and so event has happened, that's the reason the company is going for liquidation. Very, very clear with this? Yes. And as soon as this particular resolution is passed, from that day, within a time period of 7 days, the company will notify to the ROC and to the IBBI that we have taken the declaration from the directors, and also we have passed a resolution. The date when the resolution was passed, the date when the special resolution was passed, that was the date when the liquidation proceedings have commenced. Okay, now once the liquidation proceedings commence, after that again we are going to sell off our assets, we are going to pay off our liabilities, and once that thing is done, then the liquidator will make an application to the AA that, sir, everything is over, please pass a dissolution order. The date when the dissolution order is passed, that will be considered as the date of dissolution, and then we will inform it to the registered authority within a time period of 14. Okay, this is how your voluntary liquidation process comes to an end. I hope I am very clear with this, everyone. Yes, and then you have got some preferential transactions, undervalue transactions, extortionate credit transaction. Just go through it once, not very important, but just to be read once. And for the pre-packaged insolvency resolution process, I have already uploaded a separate video for that, the link for which I'll be putting in the YouTube description section, and I've already done it for the amendment videos. I've already put it in the description of my amendment videos, etc. also. So pre-packaged insolvency resolution process can be referred from there. Okay, so these were whatever things we have revised here in the chapter, these were your conceptual provisions. Okay, these were your conceptual provisions, minimum things that you have to remember for the purpose of this IBC chapter. And then in the super quick revision charts, I have put almost all the important provisions. You can just revise it, read it from the textbook once. I hope I am very clear with this, everyone. Okay, so let's start with a super quick revision of the next chapter, that is the SEBI Act 1992. Let's start with it. Now, first of all, what are the objectives? What are the main objectives? What is the main purpose of formation of this particular law? So, most three important objectives here is to protect the interest of investors who are going to deal in the securities market, then to promote the development of the securities market, and to regulate the securities market so that it is going on in a fair manner, or whatever transactions happen here in the securities market are done in a fair manner. Okay, for this particular purpose, first of all, the chapter is very simple. Okay, now for the purpose of this act, they had established a board called as the SEBI. SEBI full form. What is the full form? Obviously, ma'am, we know. Now, this SEBI was established as what? This was established as a body corporate. So, it is going to have a perpetual succession. It is going to have a common seal. It can hold property in its own name. It can sue any other person, or it can be sued by any other person. And SEBI is going to have some members. SEBI management I am talking about. It is going to have some members within it that has a chairperson. Then it has 2 members from the officials of the central government, 1 person from the officials of the RBI, and 5 other members who are nominated by the central government, out of whom at least 3 of them should be whole-time members. This is how the management of the SEBI looks like. Okay, now the people who are sitting here in the management of the SEBI, let's talk about their qualifications, and let's talk about their tenure. So they say that the chairperson of the SEBI, okay, chairperson of SEBI, and every whole-time member, chairperson and every whole-time member of the SEBI, if they are coming into SEBI, they are going to hold their office for a period for one term of 5 years and maximum up to 65 years of age. And once their one term gets over, after that they can be reappointed, but maximum they can act as up to 65 years of age. Okay, and obviously they should not be financially interested into SEBI, because that leads to lack of independence. Okay, and these people should be some people with ability, knowledge, integrity, experience, and all those things. Acha, can the central government remove these particular people from the management of the SEBI? Answer is yes, definitely. The chairperson and 5 other members, the last 5 members who were nominated by the central government, those members can be removed by the central government. Either we can remove them immediately by giving them 3 months salary and allowances, or we can give them a 3 months notice now that you will have to leave the office after a period of 3 months. Okay, so this is the way in which their removal can be done. Now, similarly, can these people also say that we want to leave the management of the SEBI? Definitely, yes, they can give a written notice to the central government of 3 months, and then they can relinquish their office. Okay, so above point was talking about removal, and this one is talking about your resignation kind of a thing. Acha, now for removal we had seen two methods. What were the two methods of removal? Either those can be removed today itself by paying them 3 months salary and allowances, or we can tell them that we'll give you 3 months notice in writing and you will have to relinquish your office after a period of 3 months. But for what reasons? For what reasons these people can be removed? These people can be removed if they are adjudicated as an insolvent person, or if they are declared by the court to be of unsound mind, or if they have if they are convicted of any offense involving moral turpitude, or if they have made wrong use of their position. Then in that case, after giving a reasonable opportunity of being heard, those people can be removed from the management of the SEBI. Okay, and if these people, now since SEBI is there, SEBI is basically a board there which is going to run the entire securities market. So SEBI is going to conduct meeting from time to time, and any person who has got any interest in that particular meeting, direct or indirect interest in that particular meeting, then in that case that person will disclose his interest and he will not take part in any of such discussions in the SEBI's meeting. Very, very clear with this? Yes. Now going on to section number 11, as you can see here, section number 11 talks about powers and functions of the SEBI. This is a very general answer but a little lengthy answer, which we will divide into small parts. Now first of all, in powers and functions of the SEBI, first let's talk about duty of the SEBI. Okay, three most important objectives of the act: to protect the interest of the investors, then to regulate the securities market, and to promote the development of the securities market. These three are also the duties of the SEBI. Okay, then there are few powers, few specific powers which are there only with the SEBI. Now SEBI is going to regulate the working of the stock exchanges, recognized stock exchanges. It will prohibit insider trading. It will collect fees for providing services. Then it can even call for information. It will prohibit the fraudulent activities. It will prohibit the unfair trade practices, etc. These are specifically whose powers? These are specifically your SEBI's power. Along with that, SEBI also has got the power to conduct inspection of books of accounts of any particular person who is coming under the purview. Like example, it can do the inspection of books of accounts of stock exchanges, of any listed company, proposed to be listed company, etc. But you can touch or you can do the inspection of books of accounts of any listed company or proposed to be listed company only if the SEBI has got the reasons to believe that that particular company is indulged in insider trading or fraudulent and unfair trade practices. See, whenever you're going and inspecting the books of accounts of a listed company or proposed to be listed company, that is a big thing. So that can be done only if we have got the reasons to believe that such companies indulge into insider trading practices. Okay, then SEBI, we had discussed this in previous chapter also. SEBI has got all the powers as vested in a civil court. Yes, acha. Now SEBI also has got, we'll study further also. SEBI also, after doing inspection, it also has got the powers to do investigation. Okay, once either when the investigation is going on or once the investigation is completed, SEBI also has the powers. SEBI also has the powers to suspend the trading in the recognized stock exchange. It can prohibit some person in trading into securities market. It can stop restrain any person from accessing the securities market. It can remove any member from the recognized stock exchanges. It can attach the bank account which was involved in this violation of the provisions of the SEBI. It can attach such bank accounts, etc. These are some specific powers which can be exercised by the SEBI when the investigation is going on or after the investigation has been completed. Yes. Okay. Then whenever any particular company wants to raise money from the general public, it is mandatory for that particular company to issue prospectus or any offer document, right? So now here in such cases, in that particular prospectus, we already have in our Companies Act what all things should be there in the contents of the prospectus. Along with the provisions of the Companies Act, SEBI can also specify by regulations what all things are to be disclosed in that particular prospectus specifically, or what all things, or it can also specify by way of a general order or by a special order that if, for example, if a telecom company is coming up with a public issue, what extra things are to be disclosed in the prospectus. So a common thing which is to be followed by every company, that is already given in the Companies Act. What extra things is to be disclosed in the prospectus can be specified by the SEBI by way of SEBI regulations or by passing of any order. Very clear with this? Yes. Okay. Then after that, in section number 11B, section number 11B talks about powers of the SEBI to issue directions and to levy penalty. Now, SEBI can issue directions on whom? SEBI can issue directions on any person who is covered under section number 12. Ma'am, who all are covered under section number 12? Example, recognized stock exchanges are covered, mutual funds are covered, REITs are covered, InvITs are covered, then your stock brokers are covered, other intermediaries are covered, underwriters are covered, investment advisors are covered. All these people who somewhere, are related to the securities market, all these people are coming under section number 12. Means if they want to function for the securities market, they have to first obtain registration from the SEBI under section number 12. So can SEBI levy directions on these particular persons? Can it issue directions on these persons? Definitely answer is yes. Plus SEBI can also levy penalty, or it can also issue directions on a listed company or a proposed to be listed company also. Okay, but when will it issue directions? If it wants to protect the interest of the investors, if it want to prevent the affairs, if it wants to prevent some wrongful affairs which are being going on in a detrimental manner, or whenever it wants to secure proper management, whenever it wants to make sure that everything should go on smoothly. For that purpose, SEBI can say that do this way, do that way, do this, do that, etc. And whenever SEBI issues directions, it is mandatory for the other person to listen to those directions also. Very, very clear with this. Acha, plus along with this, SEBI automatically by default goes without saying, SEBI also has the power to levy penalties on these particular persons if they are contravening any of the provisions of the law. And if someone has done the contravention of the law and earned wrongful profit out of it, then that can be confiscated also, that can be seized also. Very, very clear with this. This is given under section number 11B. And now going on to the next section, that is section number 11C, which talks about power of SEBI to order investigation. Before investigation, we just studied about inspection also. Does SEBI have the power to do the inspection? Yes, definitely. SEBI can do the inspection. SEBI can do inspection. But whenever it is doing inspection of a listed company or a proposed to be listed company, it can do only if we have reasons to believe that it is involved in insider trading or fraudulent or unfair trade practices. Okay, now once the inspection is done, after that, if it wants to go into detail of any particular thing, can it even go for investigation? Answer is yes, it can even go for investigation if it is of the opinion that some transactions are done which are done in detrimental manner, or it has violated some terms and conditions, or it has violated some provisions, then it can go for investigation also. Right, for this purpose, SEBI will appoint an authority called as investigating authority, who is going to do the investigation of the books of accounts of that particular person. Okay, for the purpose of investigation, that particular authority can take the books of accounts into its custody for a period of 6 months. It also has the powers to do the examination on oath. Right, it can, after questioning, it will also take the notes of examination, that what all questions were asked and what all answers were given for that particular question. Acha, if during investigation, if the authority comes to know that that particular person can alter the books of accounts, destroy, falsify, mutilate the books of accounts, then investigating authority will go and make an application to the magistrate or to the special court for seizure of books of accounts. And once the permission is allowed by the magistrate, it can even seize the books of accounts, and it will not return till the time the investigation is completed. If 6 months we had studied just now, that 6 months was normally whenever it wants to do investigation, then for the purpose of investigation, it can take the books of accounts into its custody for a period of 6 months. But if suppose during investigation, if there is a doubt that they can alter the books, falsify, mutilate, or destroy, etc., then in such cases, it can take the approval for the seizure order, and if seizure of books of accounts is done, then the books of accounts is to be returned at the end of till the time the investigation goes on. Very, very clear till here, everyone? Yes Okay, so this was mainly talking about what? This was mainly talking about your investigation. Before this, we had studied about, in powers of SEBI, we had studied about inspection, but in 11C, we studied mainly about the investigation. Okay, then going on to the next section in this series, that is section number 11D. Section number 11D talks about what? Section number 11D talks about seize and desist proceedings. Seize means SEBI, if SEBI is of the opinion that we have violated any terms and conditions, provisions of acts, rules, etc., then SEBI can pass an order on us that please stop doing it, pass the seize order. Please stop doing this violation, please don't do this again. And it will also pass a desist order which will say that please do not involve into this thing again, means do not repeat it. Seize means to stop and desist means not to repeat it again. But this order can be passed. This order can be passed on a listed company or a proposed to be listed company only if it is involved in insider trading or market manipulation. So did you see some benefits have been given to listed company and proposed to be listed company? That if any such like inspection order is to be passed, seize or desist order is to be passed, then you cannot simply pass those orders on them. You have to make sure, or you should be having reasonable you should be having reasons to believe that that company is involved in insider trading or market manipulation or fraudulent or unfair trade practices. Then only such actions or such orders can be passed on any listed company or proposed to be listed company. Very clear with this? Yes. Then section number 12, we had already seen, this talks about the registration certificate, means the people who are coming under the purview, of SEBI. Example I had given you was of stock exchanges, stock brokers, intermediaries, merchant bankers, underwriters, portfolio manager, investment advisors, REIT, mutual funds, your venture capital, collective investment scheme, alternate investment scheme, etc. These people are dealing into securities. So before they start dealing into securities, before that they have to get themselves registered. They have to obtain a registration certificate from the SEBI. Yes, and once they have obtained registration certificate from the SEBI, then after that it comes under the purview of SEBI, and SEBI has got the powers to issue directions and to levy penalty on such persons, right? Okay, then after that, going on to the next part of the chapter, which talks about finance, accounts and audit. This is your procedural part. In finance, accounts and audit, first of all, how does the SEBI function? Now SEBI was in the form of a body corporate, so SEBI, for the purpose of managing its activities, SEBI is going to establish a fund called as SEBI General Fund. Okay, it is going to establish a fund called as SEBI General Fund. The main inflow in the SEBI General Fund is going to be by way of fees which it is going to collect by issuing the registration certificates, etc., and mainly in the form of grants, from the central government, and this money will be utilized for paying off all the expenses of the SEBI, for meeting the salary allowances of the SEBI, and for fulfilling the objects of the SEBI. For this particular purpose, this SEBI General Fund was established. Now, talking about the books of accounts of the SEBI, SEBI is also required to maintain its books of accounts. Right, SEBI is also required to maintain its books of accounts in consultation with the CAG. Annual statement of accounts will be maintained, and this will be audited by the CAG, and audit expense will obviously be borne by the SEBI. Once the audit has been completed, after that the certified accounts will be forwarded to the central government, and central government will lay it down before both the houses of Parliament. I hope I'm very clear till here. Yes. Let's go ahead to the penalties part under the SEBI Act. Let's start with it. There are going to be 3 sections which we have to compulsorily remember out of the entire list of penalties that has been given. At least these 3 sections to be remembered. Section number 15A, section number 15F, and section number 15G. Okay, first of all, let's do section number 15A, the first section. This penalty is applicable if any particular person was asked by SEBI to furnish any information, to file any particular return, and if that person fails to furnish the information, or if he gives the incomplete information, or if he fails to file the return within the specified time period, etc., then that person will be liable to a penalty minimum rupees 1 lakh, which can go up to 1 lakh per day. Okay, 1 lakh per day, but maximum up to rupees 1 crore. This is the maximum penalty that is going to be applicable there. Yes, so minimum 1 lakh, maximum 1 lakh per day, but maximum limit cap up to rupees 1 crore. Okay, this is the amount of penalty that is leviable under section number 15A. Right, now going on to the next section that we have to remember, there is section number 15F. 15F is generally such a type of section on which we get direct questions. Okay, we get direct questions there. Section number 15F, penalty in case of stockbrokers. Now, in that, basically, there are 3 sub penalties which are coming under section 15F. The first one being, if the stockbroker fails to issue the contract note in specific form. Okay, if it fails to issue the contract note in specific form, then the amount of penalty is minimum rupees 1 lakh, maximum rupees 1 crore for each such default. Minimum 1 lakh, maximum rupees 1 crore. Okay, second type of sub penalty that is coming up here is, if that particular broker, if we have purchased any securities, but if he has failed to deliver us the security, or if we have sold any securities, but he has failed to make the payment to us of the sale consideration to us, then the amount of penalty is going to be same as that of section number 15A. That is minimum rupees 1 lakh, which can go up to 1 lakh per day, and maximum up to rupees 1 crore. Okay, so first one was for the purpose of non-issuing of contract note in specified form. Second one is if they fail to deliver us the security, or if they fail to make us the payment. And the last one, if any of the stockbroker is charging excessive amount of brokerage, then the penalty that will be leviable on that particular stockbroker is 1 lakh or 5 times the amount of excessive brokerage charged. 1 lakh or 5 times the amount of excessive brokerage charge, whichever is higher. Okay, so whenever you get a question, generally on this particular type you get a direct question, state the penalties that is applicable for all the stockbrokers. So directly you have to write section number 15F. I hope I am very clear till here. Yes, and then the next one, that is section number 15G. Just below that, as you can see here, section number 15G, which talks about your insider trading. Right, now in this case, if there is any particular person who has got some unpublished price sensitive information, and if that person does trading on the basis of that unpublished price sensitive information, or if he if he is able to counsel someone else to deal into securities on the basis of that information, then these people will be held guilty for the punishment of dealing or trading by the way of insider trading. And the penalty that is applicable for section number 15G is minimum rupees 10 lakh, okay, which can go up to 25 crore or 3 times the profit earned out of insider trading. Out of these two, whichever is higher. Out of these two means out of 25 crore or 3 times the profit made out of insider trading, whichever is higher. This is the amount of penalty that is applicable for insider trading. Yes, so these 3 sections, section 15A, section 15F and section 15G, these 3 sections you have to remember mandatorily. Yes, okay. So this was all about, at least these 3 penalties you have to remember. These 3 important penalties we have done. Now going on to the next section, that is section number 15I. 15I talks about power to adjudicate. Now these penalties have been given by the Act. But who is going to determine the amount of penalty? Like at many places we have got the range of penalty, etc. So who determines this amount of penalty? So for the purpose of penalties that we have studied, for that purpose SEBI appoints a person called as adjudicating officer, who is going to determine, who will give us a reasonable opportunity of being heard, and it will find out whether you are actually guilty of that particular thing or not, and then that particular person is going to determine the amount of penalty. For that particular purpose, adjudicating officer can call you, it can call certain information from you and all those things, and after that adjudicating officer is going to pass the order. Very clear with this? Yes. Okay, now listen, at places where we have got the range of penalty, example, at one of the places we had got minimum rupees 1 lakh, which can go up to rupees 1 crore. Remember that? Minimum rupees 1 lakh, maximum up to rupees 1 crore. So now this is a range. So now, will lesser amount of penalty be applicable or will higher amount of penalty be applicable? What will be the scenario? So that depends on certain factors. That does not depend upon the mood of the adjudicating officer. That depends upon certain factors. Like example, how much amount of loss was caused to the investors? What is the amount of gain that has been made by that particular defaulter person by contravening the provision? Is it the first time that person has done the default or he is doing it repeatedly? Right? Depending upon such factors, the adjudicating officer will determine the amount of penalty. I hope I am very, very clear till here. Yes, and whatever penalty is collected by the adjudicating officer here, all the penalty goes to an account called as Consolidated Fund of India. Must be remembered. Maybe for MCQ purposes, etc. All any penalties which are collected will be credited to the account called as Consolidated Fund of India. Very, very clear with this? Yes. Okay. Now, another thing, yes, whenever, penalties have been initiated or penalty order has been passed by the adjudicating officer, etc., then the accused person can go and make an application to the SEBI. Okay. For that, the procedure has been given by the SEBI. SEBI, considering the nature of the default, the gravity of the default, the amount involved in the default, etc., it may accept your application for settlement. Okay, it may accept your application for settlement. Settlement means your penalty amount can be reduced there, and whatever is the lesser amount of penalty that will be collected from us now, after settlement, the amount will be reduced. So whatever is the reduced amount of penalty that will be collected from us, that will also go to the Consolidated Fund of India. Just like your penalties was also going to Consolidated Fund of India, similarly, even this will be, the settled amount is also nothing but lesser amount of penalties, right? Even this will go to the Consolidated Fund of India. Very, very clear with this? Yes. Now, just like in the previous chapters also, we had these appeal provisions. Similarly, in SEBI also, we have got the appeal provisions. For that purpose, we have established an authority called as SAT, S-A-T. S-A-T stands for Securities Appellate Tribunal. Okay, just like we had Appellate Tribunal in the PMLA chapter also, here we are going to have Securities Appellate Tribunal. So ma'am, who all are going to come and sit in the Securities Appellate Tribunal? You're going to have a head called as presiding officer. Then you're going to have some number of judicial members and you're going to have some number of technical members sitting within this particular SAT. These are the total number of members. Head of the SAT is called as a presiding officer. Then you have some judicial members, you have some technical members. Then after that, generally, whatever cases goes to the SAT, that is whatever appeal cases goes to the SAT, generally that is handled by a bench. Okay, bench, and bench generally consists of two persons, one judicial member and one technical member. Suppose if there is a dispute between this judicial and technical member, then in that case, the matter will be referred to the presiding officer and then we are going to take a revised majority. I hope I am very, very clear with this. Yes, I hope you are able to recollect because this is not the first time that you are studying. Now, then let's talk about the qualifications of these members of the SAT. Okay, first let's talk about the presiding officer. Who is eligible to become a presiding officer? So any person who is or who was judge of the Supreme Court or Chief Justice of High Court or judge of High Court for a period of 7 years. What did I say? Judge of Supreme Court, Chief Justice of High Court or judge of High Court for a period of 7 years. That person, either he is or he was, then that person is eligible to become a presiding officer. Okay, now let's talk about a judicial member who is eligible to become a judicial member. So any person who is or who was a judge of High Court for a period of 5 years. Judge of High Court for a period of 5 years. Above it was judge of High Court for a period of 7 years. Right? So your judge of High Court who is or who was, then that particular person is eligible to become a judicial member. Similarly, for a technical member, any person who is or who was a secretary or additional secretary or additional secretary in the Department of Central Government or State Government, that person can be appointed as a technical member. Or any person who is a person of proven ability, integrity, knowledge, experience of at least 15 years, 15 years in the financial sector, securities, market, etc., then that person is also having the subject knowledge. So that person is eligible to become a technical member. Okay, so first qualifications we studied for the presiding officer, then we studied for the judicial member, and then we studied for the technical member. Very, very clear with this? Yes. Now, just try to understand, whenever these people are appointed, okay, whenever these people are appointed, they are appointed for a specific tenure. Just like those chairperson of the SEBI, etc., they were appointed for a term of 5 years and maximum up to 65 years of age. Similarly here, members of the SAT, they can be appointed for a period of 5 years, then they can be reappointed for another period of 5 years, but maximum they can act is up to 70 years of age. In members of SEBI, it was 65 years of age, here it is 70 years of age. So 5 plus 5 and maximum up to 70 years of age. Very, very clear with this? Acha, now, can these people be removed or can these people resign? Just like we had studied for the SEBI members also. Yes, so these members can resign by giving a notice to the central government in writing, and they have to continue in their office. Means they have to give, first of all, at least 3 months notice in writing, or they have to continue till their successor enters upon the office, or they have to continue till their tenure gets over, whichever is earlier. So either 3 months from the date of notice, or till the successor enters upon the office, or till my tenure gets over, whichever is earlier. Very, very clear till here? Yes. So for if in case they are resigning, then this is the time period till which they have to serve in the office. Very, very clear with this? Yes. And then going on to removal part, that is, can these members of SAT also be removed by the central government? Answer is yes, they can very well be removed by the central government, but only after an inquiry has been made by the judge of Supreme Court. If that particular person is adjudged as an insolvent, or if that person is physically or mentally incapable, or if that person is guilty of any offense involving moral turpitude, or if that person has abused his position, or if that person has acquired financial interest. For any of these reasons, normal reasons, right? Insolvency, physically or mentally incapable, convicted of any offense, abused his position, acquired financial interest, etc., then there's no point keeping that person sitting in the SAT there, and that's the reason that person can be removed after giving a reasonable opportunity of being heard. Okay, here the removal is immediate removal. Remember, in the first part of the chapter, we had studied for removal of the members of the SEBI. For them, it was either they will be removed today with 3 months salary and allowances, or they will be removed after a period of 3 months. No such condition is applicable for the members of SAT. Very, very clear with this? Yes. Now listen, now just try to understand. We just studied about the constitution. Okay, we just studied about the constitution of SAT. Now let's talk about the main thing, that is appeal to the SAT. Now if we are aggrieved by any order passed by the SEBI, or if we are aggrieved by any order passed by the adjudicating authority, etc., then we can go and file an appeal before the SAT within a time period of 45 days, and this delay can be condoned if there is a sufficient cause. Now the decision will be taken by the SAT. SAT can confirm, modify, or set aside this particular order, and SAT should try to dispose it of as expeditiously as possible, as fast as possible, and should try to dispose it of within a time period of 6 months. Okay, so 45 days plus any number of days as delay, and it should try to dispose it of within a time period of 6 months. And just remember, SAT also has got all the powers as vested in a civil court. If we do not know how to represent our case before the SAT, then we can appoint a legal representative for that particular purpose. Okay. Now, if we are again aggrieved by the order given, by the appeal decision given by the SAT, then the last level of appeal is before the Supreme Court. If you're going to the Supreme Court, then you can definitely go only on the matters involving question of law. You can go within a time period of 60 days, plus delay can be condoned for a maximum period of 60 days. And this is the last level. This is the last level of appeal that is possible there. I hope I am very, very clear till here. Yes, these were some important provisions. Like till appeal we have completed till here. Now listen, just try to understand. Do you recollect this special courts, etc. coming up there? Yes. Now, whenever penalties come into picture, those penalties are levied by whom? Penalties are levied by the adjudicating officer. But if there is a case of punishment, imprisonment or fine, if there is any such punishment given under the SEBI law, not necessary that it is there in our syllabus only, but if there is any punishment under the SEBI law, for that particular purpose, special courts are going to come into picture. Okay, special court will take cognizance, special court will take the note of that particular offense when a complaint has been filed by central government, state government, SEBI, recognized stock exchange, etc. Whenever central government, state government, SEBI, RSE, whenever they come to know about any particular such default, they will go and file the complaint with the special court. Special court will take a note of the same. It will take cognizance of that particular offense, and then the case will be tried. The case will be solved by the jurisdictional special court. So special court is going to do speedy trial of offenses, right? Same special court was also solving the cases of PMLA in the previous chapter. I hope I am very clear till here. And then one of the common provision here, what if the contravention is done by the company? If the contravention is done by the company, then in such a case, who will be held guilty? The person in charge who was there at the time when the offense was done, that person will be held guilty. But if that person proves that it happened without his knowledge or he had exercised due diligence to prevent such offense, then in such case that person won't be liable. Very clear till here? Yes. Now listen. Recovery of amount. There is something called as recovery of amount. Now, if there is any particular person who fails to pay the penalty that was imposed under the law, then there is a person called as recovery officer. He is going to issue a recovery certificate where the amount will be written, that how much amount is to be recovered from so and so person. And it can be recovered by selling our movable property, immovable property, attaching the bank account and all those things. By using those methods, the amount can be, penalty amount can be recovered from such person. Okay, now just to avoid the payment of penalty, if I have transferred my property or if I have transferred my bank account balance to my spouse or to my minor child or to my son's wife or to my son's minor child, to any of those people, to my spouse, to my minor child, to my son's minor child or to my son's wife, if I have transferred my properties or if I have transferred my bank balance to such people so that I can show as if no amount is available with me to make the penalty payment, then in that case the penalty can be recovered from those people also. Because it is a clear case that you have just transferred the amount or you have just transferred the property to those people just because you wanted to avoid the penalty payment. So it can be recovered from those people also. I hope I am very clear with this. And just like we had done the cases of death and insolvency in case of PMLA, that the case does not comes to an end, the case is going to continue. Same provisions are applicable in case of SEBI also. Yes, so these were some of your most important provisions of SEBI Act that we have covered up here. I hope I am very clear till here, everyone. Yes. And then at the end of the act, you have been given the time period for appeal and the most important penalties which are coming up. I hope I am very clear till here. Yes. Okay. Okay, so let's start with the next part of SEBI, that is the SEBI LODR Regulations 2015. First of all, full form of LODR. LODR stands for Listing Obligations and Disclosure Requirements, which is applicable, as you already know, SEBI LODR provisions are applicable to whom? It is applicable to all the listed entities which have listed any of those securities on the recognized stock exchange. It can be in form of equity shares, it can be in form of debentures, it can be in form of any other securities, debt instruments, zero coupon bonds and all those things, right? Now, for the purpose of our syllabus, we have got certain regulations coming up for our syllabus. Let's try to have a look on the most important regulations which are there. First of all, let's talk about regulation number 6. Regulation number 6 talks about regulation number 6 of SEBI LODR Regulations 2015. Regulation number 6 talks about a person called as compliance officer. As the name suggests, this compliance officer is nothing but the qualified company secretary, and this person as you already know, he is responsible for all the compliances which are applicable for the listed entity, for all the coordinations which are happening in the company, between the company and between the board of the company, or company and the SEBI also. And this person ensures that whatever things are happening in the company, whatever procedures are happening in the company, or whatever procedures are applicable to the company, those have been correctly followed. And lastly and most importantly, this person is also going to monitor the email address of the grievance redressal division. Grievance redressal division means a division which addresses the grievances of all the security holders. So that email address, whether like whatever emails have come, have those been addressed or not, etc., even that is looked after by this qualified CS, also called as the compliance officer. So this is the responsibility given to the compliance officer as per the SEBI LODR regulations 2050, right? Then after that, going to the next one, that is regulation number 24, which is kind of important for you. Regulation number 24 talks about corporate governance requirement. Corporate governance requirement with respect to unlisted subsidiary of a listed entity. See, we already know that SEBI LODR is applicable to all the listed entity. But what if a listed entity has a subsidiary which is unlisted? Then with respect to that particular subsidiary, what are the requirements which has to be followed by the listed entity? Those are given in regulation number 24. Let's try to understand that and let's try to recollect that. Okay, now first requirement which comes up in regulation number 24 is at least one person who has been appointed as independent director on the board of listed entity, the main entity, listed entity, shall also become a director in the unlisted material subsidiary. If one person is appointed as an independent director in the listed entity, that person should be appointed as a director in the board of unlisted material subsidiary. Ma'am, unlisted subsidiary we understand. What do you mean by material subsidiary? So for the purpose of this regulation, the meaning of the term called as material subsidiaries, any such subsidiary whose share of income in the total income of the group is more than 20%. Means this particular subsidiary contributes more than 20% of the consolidated income, or the subsidiary's net worth is more than 20% of the consolidated net worth, then in that case, this particular subsidiary is called as the material subsidiary. Okay, so one requirement of having a common director in both listed as well as the unlisted material subsidiary. Acha, same way, you must have heard about this audit committee. Audit committee reviews the financial statements of the listed company, and it should also review especially a particular point, that is investments made by the subsidiary company. Okay, while reviewing the financials of the listed entity, it should also review the investments made by the subsidiary company. Similarly, whenever the meetings are happening in the unlisted subsidiary company, minutes of those meetings should be placed in the meeting of the board of directors of the listed entity. Basically, what are they trying to do? Whenever you are keeping a watch on the listed entity, at the same time also keep a watch on unlisted subsidiaries, right? Achha, similarly, whatever significant transactions are undertaken by the unlisted subsidiary, those transactions should be brought to notice to the board of the listed entity. Means whatever important transactions are happening in the unlisted subsidiary, that should be brought in front of the listed entity also. Very, very clear with this? Yes. And then two most important pointers which are coming up here is whenever a listed entity, if suppose it is disposing of, it is selling off its stake in the material subsidiary, and because of that its shareholding is going to go to less than or equal to 50%. Means now onwards it is no longer going to be a subsidiary. As of now, I have an unlisted material subsidiary. Now I am reducing the stake in that material subsidiary, because of which my shareholding is going to less than or equal to 50%. Then that has to be done only by passing a special resolution in the general meeting. Okay, that can be done only by passing a special resolution in the general meeting. But in two cases, even if you don't pass a special resolution, that is okay. First one is when this scheme was approved by any court or tribunal, or whenever this scheme was approved under IBC, or when it was forming a part of resolution plan under IBC, and because of that the stake is getting reduced. So in such cases, in these two cases, passing of SR is not required. In all the other cases, if the stake is getting reduced, if we are reducing our stake in the material subsidiary to less than or equal to 50%, then we have to pass a special resolution in our general meeting. Very clear with this? And the last point, whenever the unlisted material subsidiary is selling off its assets of more than 20% of its total asset, then in that case SR has to be passed in the general meeting of the listed entity. In two cases SR is not required. One is when the scheme has been approved, or when this transaction has been approved by any court or tribunal, or whenever this was approved under a IBC plan. Are you clear with this? Yes, these are some important corporate governance requirements which has to be followed by every listed entity in respect of its unlisted subsidiary. Very, very clear till here, everyone? Yes, regulation number 24, you can mark it as important. You can get a question on regulation number 24. Okay. Then going on to the quarterly compliances. Everyone come to the quarterly compliances which has to be followed by every listed entity. Let's try to understand this quarterly compliances. Now, first of all, there is something called as, in regulation number 13, subregulation number 3, there is something called as grievance redressal mechanism. Okay, grievance redressal mechanism. That is, every listed company will have to file with the stock exchange a statement which shows for every quarter how many grievances are pending at the beginning of the year, plus how many new complaints are received during the quarter, minus how many complaints have been resolved during the quarter, and how many complaints are pending at the end of the quarter. A statement showing this has to be filed by every listed company to the recognized stock exchange within 21 days from the end of the quarter. Okay, within 21 days from the end of each quarter. This is the quarterly compliance which has to be fulfilled by every listed company. Very clear with this? Acha. Then for other things, there is something called as other corporate governance requirement, for which a specific format is given. Listed entity will have to submit a quarterly compliance report within 21 days from the end of every quarter. Right? So first one was for grievance redressal mechanism. Second one is for other corporate governance requirement. Third one is for the shareholding pattern. Every listed company should submit 1 day before its listing. Okay, 1 day before it gets listed, it has to submit its shareholding pattern, because after listing, definitely the shareholding pattern is going to change, because some number of shares are going to come to the general public in the form of free float. So 1 day before the listing. Then after listing, every time on quarterly basis within 21 days from the end of the quarter. And whenever there is a change, whenever there is any capital restructuring and which has led to a change of more than 2% of the paid up share capital, then within 10 days of such capital restructuring. One was 1 day prior to listing. Then on regular basis, on quarterly basis within 21 days from the end of the quarter. And third one is whenever there was a capital restructuring, because of which there is a change in the share capital of more than 2% of the paid up share capital, then within 10 days inform this about the change in the shareholding pattern. I hope I am very, very clear till here, everyone. Yes. And yes. So these were the three most important quarterly compliances which every listed company has to comply. Okay. Similarly, whenever a listed company is conducting a board meeting, okay, whenever a listed company is conducting a board meeting, before conducting the board meeting, it just has to give the intimation to the recognized stock exchange. A prior intimation of board meeting should be given to the recognized stock exchange whenever we are conducting the board meeting for the following circumstances. Okay, whenever we are conducting the board meeting to consider the financial results, then at least 5 days before the board meeting, go and inform it. Go and inform that we are going to conduct a board meeting to the recognized stock exchange. How many days in advance? 5 days in advance before the meeting, inform it to the recognized stock exchange. Okay, then whenever you are going to conduct a board meeting for declaration of bonus, of a proposal of buyback, or for recommendation of dividend, or for FPO, etc., then in such cases, for these things, you have to first conduct a board meeting. So at least 2 days before the board meeting, at least 2 clear days before the board meeting, inform about it to the recognized stock exchange that we are going to conduct a board meeting for so and so matters. Okay. Then similarly, whenever you're going to alter the interest rates, okay, whenever you're going to alter the interest rates, example in case of bonds or debentures, or whenever you're going to alter the rights of the security holders, inform at least 11 days before to the RSE that you're going to alter it. I hope you are understanding this. Yes, the thing that we studied on the previous page, that was quarterly compliances that we were submitting to the recognized stock exchange. And here we are not submitting anything to the RSE, we are just informing the RSE that we are going to conduct a board meeting for so and so reasons. I hope you are very, very clear with this. Yes. Okay. Then going ahead to the type of committees. For type of committees, I have already prepared a summary chart in your book. Let's refer it from the summary chart. Yes, everyone here, summary of different type of committees. Can you see this? Yes. So you have got your audit committee, nomination and remuneration committees, stakeholders relationship committee, and last one is your risk management committee. For the first 3 committees, are mandatory for every listed entity. Okay, it is mandatory for every listed entity. But when we talk about the risk management committee is to be compulsorily be formed by top 1000 listed entities. It is not applicable for every listed entity. It is applicable only to the top 1000 listed entities on the basis of market capitalization. Okay, so first 3 are mandatory, and then you have got what number of members should be there in the audit committee, NRC, SRC and RMC. So in all there should be at least 3 members. Okay, at least 3 members sitting in this particular committee, and in most of it, proportion of independent directors is the most. Because we need independence, we are going to take important decisions in this particular committees. So in audit committee and NRC, at least 2/3 of them should be independent directors. And in SRC and NRC, SRC and RMC, at least one of them should be independent director. Yes, and for the first 2, where at least 2/3 of them were independent directors, chairperson of this committee should also be an independent director. For stakeholders relationship committee, that person can be any non-executive director, and for RMC it should be a member of the board, because in RMC you can have members out of the board also sitting in the risk management committee. The work of risk management committee is to identify the factors which can cause risk to the entity and to prepare a plan to avoid those risks. So you can have some experts also from the outside, right? So one member from the board should be the chairperson of this particular committee. Yes, audit committee meetings. How many meetings should be conducted? At least 4, maximum gap of 120 days. For NRC and SRC, at least 1 meetings, and for RMC, at least 2 meetings should be conducted. Yes, quorum. Quorum for first, second and last one is almost similar. For first and second, it is 2 or 1/3, whichever is higher. 2 members or 1/3 of the members sitting in this particular committee, whichever is higher. In audit committee, we need at least 2 independent directors present in the quorum. In NRC, we need at least 1 independent director present. And here we need at least 1 member from the board present, because here we can have outsiders also. And for SRC, they haven't specified the quorum. So the committee can decide what should ideally be the quorum for this particular committee meetings. I hope you are very, very clear till here, everyone. Yes, so this was your type of committees. Audit committee, the main purpose of formulating here is, what is the main purpose? To appoint the auditors, to decide the remuneration of the auditors, to decide the scope of work which is to be done by the auditors, to address the grievances or the complaints raised by the auditors, and for some other specified purposes. Nomination and Remuneration Committee, purpose of establishing this particular committee is to choose the directors, to determine their amount of remuneration, to identify their performances, to give them an increase, in the pay on the basis of their performance, to frame a policy for the directors of the company, etc. That work is done by the NRC. Now, what is the work of the SRC? The work of SRC is to address all the grievances raised by all the security holders. All the security holders, not the stakeholders, of all the security holders. And Risk Management Committee, we have already discussed. The main work of this Risk Management Committee is going to be to identify the factors, internal factors, external factors, which can pose risk to our entity, to our company, and to prepare risk fighting plans and to implement it. I hope I am very, very clear till here. Yes. Going on to the other part now, everyone here. Yes. And one thing very, very important is RMC was not applicable for all the listed entities. It was applicable to the top 1000 listed entities. Top 1000 listed entities. Yes. Now, one important thing that we have to do here is regulation number 17. Okay, regulation number 17. Let's try to do that. Star mark this, regulation number 17. Now, regulation number 17 talks about a particular mix, okay, a particular optimum combination of executive directors and non-executive directors. So, they say that, now since we are talking about every listed entity should have at least one woman director, and then they say that at least 50% of the total directors should be comprising of non-executive directors, because we want independence. So, at least 50% of them should be non-executive directors, balance of them can be executive directors, right? And suppose, now if the chairperson, now let's talk about the composition of independent director, okay? Suppose if the chairperson of your board of directors is a non-executive director, means it is a good position. Chairperson is a non-executive director, then at least 1/3 of the board of directors should be independent directors. At least 1/3 should be independent directors. But if chairperson is an executive director, okay, when the chairperson is an executive person, then in that case, at least half of them should be independent directors. If chairperson is NED, means he is independent. So, 1/3 of the board can be independent directors. But if he is not a NED, then at least half of them should be independent director. Very clear with this? Acha, what if chairperson is a NED, but he was a ex-promoter or he was related to the promoters of the company, etc. By status, he is NED, but he becomes related to the most important people in the organization. So, he will be considered to be executive chairperson, and if he is considered as an executive chairperson, then what should be the composition of independent directors in the board of the directors? It should be at least 50%. Very clear with this? Yes, did you understand the logic behind this? Chalo. Then going ahead to the last two regulations, regulation number 17A and regulation number 26. Let's discuss it. Yes, here it is. Regulation number 17A talks about maximum number of directorship. Means a particular person can be a director in how many listed entities. Okay, for this particular purpose, you have already studied in your Companies Act also that a person can be appointed as a director in 20 entities, 20 companies. Out of that, maximum 10 public companies he can hold directorship, and the rest can be your private entities. Okay, now here we are discussing that a person can be a director in how many listed entities. So, a person can be a director in maximum 7 listed entities, and he can also be appointed if he is holding the position of independent director. Means a person can be appointed as an independent director in maximum 7 listed. It's not 7 plus 7. Normal director in 7 entities or independent directors in maximum 7 entities, 7 listed entities. Okay. But if there is a particular person who is already appointed as a whole-time director or a managing director in any listed entity, means he is already holding the key position in the company, so he can act as an independent director in maximum 3 listed entities instead of 7 listed entities. Okay, so 7 normal directorship, 7 independent directorship, okay, no problem. Okay, But if he is already holding a position of MD or WTD in a listed entity, he can be appointed as an ID in only 3 listed entities. Less the number of positions, more will be the concentration. That is the logic behind it. This was given in regulation number 17A. Okay, this was given in regulation number 17A. Now let's go to the last regulation, that is regulation number 26. Regulation number 26 puts a restriction on us that you can become a committee member. You as a director, in how many committees can you be appointed as a member, or in how many committees can you become a chairperson? Okay, so a particular director can become a member of maximum 10 committees across all the companies. I can become a member in maximum 10 committees across all the companies. Okay, and I can become a chairperson in maximum 5 committees across all the companies. Members 10, chairperson 5. Okay, and only 2 committees are considered for this purpose. One is the audit committee and the other one is the SRC. For other NRC, RMC, etc., there is no limit. So this 10 and 5 limit, we just have to check for 2 committees, that is audit committee and the SRC. I hope I am very, very clear till here, everyone. Yes, these were your most important provisions for the SEBI LODR chapter. Yes. Okay, so let's start with a super quick revision of the FEMA Act 1999. First of all, the Act applies to whom? The Act applies to whole of India again, as was applicable for all the other acts also. Plus, it is also applicable to all the branches, to all the offices which are outside India and which are owned or controlled by a person resident in India, right? Now, in this particular law, first thing that we are supposed to do and we are going to do is the definitions part. In definitions, first 2 definitions, let's consider 2 definitions first. One is capital account transactions and the other one is your current account transactions. For the purpose of your capital account transaction, let's try to understand the definition. You all remember the definition, try to recollect it with me. Capital account transactions means any transaction which alters the assets or liabilities, including contingent liabilities of a PRI which is situated outside India, or it includes any transaction which alters the assets or liabilities of a PROI. Okay, such assets or liabilities which are situated here in India, any such transaction which is altering such assets or liability, such a transaction will be called as a capital account transaction. And any transactions which are other than capital account transactions, those transactions will be called as your current account transactions, right? Examples of current account transactions can be payment in the course of foreign trade, import payments, export payments, received, paid, etc. Then loan transaction will be considered as a capital account transaction, but interest on loan will be considered as a current account transaction. Similarly, income from investments will be considered as your current account transaction. Any amount that you're sending outside India for for meeting some living expenses, medical treatment expenses, etc., those will also be considered as your current account transactions. So first we need to learn and first we need to understand the definition of the term called as capital account transactions, that you have to quote mandatorily in your exam whenever you're getting a relevant question. And suppose if they are asking you your current account transactions, then first quote the definition of capital account transactions and then write there any transactions other than the capital account transactions will be considered as your current account transaction. Very, very clear with this? Yes, in your textbook we have got certain examples there. You can just refer it once after reading the definition part. Then going on to the next important definition, that is definition of PRI, person resident in India or person resident outside India. Okay, person resident in India or person resident outside India. Let's try to understand it. First, let's do it for the individual people. Okay, person resident in India means any person who is residing in India for more than, or who has resided in India for more than 182 days. For more than 182 days during the preceding financial year means he has fulfilled the basic condition of being a PRI, and that's why the person can be called as a PRI. What did I say? If he had stayed in India for a period of more than 182 days in the preceding financial year. Okay, but if there is any person who has gone outside India or any person who stays outside India for three reasons, either for employment outside India or for carrying on business or vocation outside India or for any other purpose where his purpose or the period when he's going to come back to India is totally uncertain. Okay, so for employment outside India, business or vocation outside India, or for any other purpose outside India, if that person has gone, then there is an inherent assumption that he is going to stay outside India for a longer period. That's why he will be excluded. Okay, he will be excluded from the term called as PRI. Okay, he will be excluded from the term called as PRI. Therefore, he will be called as the PROI. And similarly, any person who is coming to India, okay, any person who is coming to India for any of those three reasons, okay, any person who is coming to India for any of those three reasons, either for business or for employment in India or for any uncertain period, okay, then in such a case, that person is going to stay in India for a longer period. That's why that person will be included in the definition of the person called as PRI. So if you're going outside India for a longer period, exclude that person from PRI. But if that person is coming to India for a longer period, that is any of these three reasons, then that person will be included in the term called as PRI. Very, very clear with this. This is for PRI individual thing. Okay, so now for persons other than individual, let's try to understand when will a person be considered as a PRI. So when we talk about companies, any person or any body corporate which is registered in India or which is incorporated in India, that will be considered as a PRI. Then after that, any branch or any office which is situated here in India, and controlled by a PROI, even that will be considered as a PRI just because the fact that it is situated here in India. Okay, similarly, any branch, office, etc., which is situated outside India but which is controlled or which is owned by a PRI. Since the control is by the PRI, wherever you get an Indian connection here, they say that that person will be considered as a PRI. I hope I'm very, very clear till here. Yes, so individuals, we check the number of days stay, and after that we check the purpose, for what purpose a particular person is coming in India or for what purpose a person is going outside India. After that, for persons other than individuals, for company, we will always say that Indian company will always be considered to be a PRI. But if there is any branch which is controlled or owned by a PROI, but which is situated here in India, will also be considered as a PRI, or which is situated outside India but controlled or owned by a PRI, will also be considered as a PRI. Right? All these people were coming under the definition of the term PRI, and any person who is not a PRI, okay, any person who is not a PRI will be considered as a PROI. Okay, any person who is not a PRI will be considered as a PROI. I hope I am very, very clear till here. Yes, so we are done with the current account transactions, capital account transaction, definition of PRI and definition of PROI. Just like we had the examples on current account and capital account transactions, same way we have got the examples of this PRI and PROI. We have it for current account and capital account also, and we have it for PRI and PROI also in your textbook. Yes. Now, similarly, you have got a few sections here before we jump to the main part of the chapter. You have got two sections coming up here. One is your section number 3 and the other one is your section number 4. Section number 3 mainly talks about regulation and management of foreign exchange, management of foreign exchange. In that, let's talk about section number 3. Section number 3 basically contains 4 points within it. First one, if there is any particular person other than an authorized person, means other than a bank, dealer, etc., that person, like people like you and me, we cannot deal into forex or foreign security, but we can do it through an authorized dealer. We can do it through a money changer, but we cannot directly deal. We cannot directly trade into dollars, for example, here. Okay, similarly, we cannot do any payment on behalf of a PROI person here in India. Suppose if a PROI is supposed to do some transaction here in India, we cannot do the payment on his behalf. Okay, next one, similarly, say for example, I am running some business, and if I want to receive some fees or if I want to receive some payment here, then in that case, I cannot do it in foreign currency directly. Okay, I can accept INR, but I cannot directly accept the foreign currency. And next one is I should not enter into any such type of financial transactions, for example, hawala transactions. Okay, that is totally prohibited. All these things are given under section number 3. And now they are talking about section number 4. Section number 4 talks about holding of forex. They say that by default, a PRI should not acquire, should not hold, should not own, should not transfer any forex or foreign security except as per the method provided into the act. Means by default we cannot deal into forex, but you can deal in the methods or in the manner which is provided into the act. Very, very clear with this? Yes. So ma'am, how much forex can we hold, etc.? We have those provisions. As per section 4, you cannot do it except as per the act. Then ma'am, what amount does the act specify? We will come to the same. Yes. Now going on to the next most important part of the chapter, that is section number 5, which talks about your current account transactions. Okay, now they are telling current account transaction definition we have already done. Now first of all, they are telling that whenever we are entering into any current account transactions, there will be a few transactions which are totally prohibited. There will be few current account transactions for which we require the prior approval of the central government, and then there will be a few transactions for which we require the prior approval of the RBI. Let's try to understand that and let's try to remember that for exam point of view. Okay, now first of all, they are telling that if you are doing any transactions which are specified in schedule 1, we will see schedule 1 transactions, those transactions are altogether prohibited, and any transaction with a person resident in Nepal or Bhutan, or any travel transaction to Nepal or Bhutan in foreign currency is totally prohibited because Indian rupees works there. Okay, so no need to spend foreign currency for such country. Very, very clear with this? Yes. Now schedule 1 transaction, let's try to understand which transactions are covered in schedule 1. Okay, schedule 1 has got 8 transactions which are totally prohibited. Okay, 8 transactions which are totally prohibited. Example, if you are, try to recollect, and you have already studied, now you just have to remember. Now, any remittance out of lottery winnings, any remittance out of any other casual income, like income from racing, riding, or any other hobby. Then remittance for purchase of lottery tickets. Okay, remittance for purchase of lottery tickets, band, magazines, football pools, etc., which are specifically prohibited as per the government. Okay, then if you want to make the payment of export commission, for such a transaction where there is a barter transaction towards equity investment in joint venture or wholly owned subsidiary, means we have done investment, and for that particular purpose we have got stake in the other company. For that we have not paid the money, but we have exported the goods, so export commission on those goods is totally prohibited. Similarly, export commission in case of rupee state credit route is totally prohibited, but in that case tea and tobacco, whenever you have exported, you can pay export commission on that up to 10% of the invoice value. Up to 10% of invoice value and export of tea and tobacco is okay. Otherwise, any export commission under rupee state credit route is altogether prohibited. Then payment of dividend under dividend balancing system is totally prohibited. Callback services for telephone is prohibited, and any remittance of interest income which we have earned out of non-resident special rupee scheme account. From that, if you are remitting any amount of interest from this particular amount, that cannot be remitted outside India, that has to be utilized here in India only. So these are certain specific transactions which were altogether prohibited. These current account transactions are altogether prohibited, and all these transactions are mentioned in schedule 1. Okay, so schedule 1 plus Nepal Bhutan transactions are altogether prohibited. Right, now going on to the next schedule, that is schedule number 2, which talks about transactions which have been listed here, which requires prior approval of Central Government of India. Okay, prior approval of Central Government of India from respective ministries and from respective departments. We have to take the necessary approvals. For this, you already have the story code made in your textbook. That is, total we are going to have 9 pointers. Okay, total we are going to have 9 pointers coming up here. Let's try to recollect the story and put in those 9 pointers. So first of all, I wanted to go for a cultural tour, right? I'll just show you the pointers here. I wanted to go for a cultural tour, for which I saw an advertisement. Since the traveling was very costly, so I decided to go by a freight vessel. For that purpose, I contacted an ocean transport agent, and he allowed me to go by way of freight vessel. Then while going, our container got detained, and so to safeguard myself, I started sending signals by transponders. Then someone came for my help and asked for prize money. And I paid it for my protection. Okay, so these are the type of transactions for which, if you want to do any remittances outside India, you need to take the prior approval of Central Government of India from the respective ministries which are written here. Okay, besides every particular transaction, the name of the ministries are given there. Yes. So Schedule 2 transactions are not prohibited transactions. Schedule 2 transactions can be done subject to prior approval from the central government, right? And then the next one, that is Schedule 3. Okay, Schedule 3 transaction. Schedule 3 transactions contains all the transactions which require prior approval from the RBI. Okay, but for that, what they have done is, first of all, the government has introduced something called as liberalized remittance scheme, where we can remit outside India up to $250,000 without any approvals. Okay, up to $250,000 without any approvals. Very clear with this? Okay, if the amount exceeds $250,000, then we are required to take the prior approval of RBI. So ma'am, for which all things will be covered in Schedule 3? Basically, any such type of remittances which were not covered in Schedule 1 and Schedule 2 will be covered in Schedule 3. Example, if you are going for travel to any other country except Nepal and Bhutan, okay, then if you want to incur some medical treatment expenses outside India, if you want to incur some education expenses outside India, if you want to send some gift outside India, or if you're incurring any emigration expenses for permanently settling outside India, if I'm maintaining one of my relatives outside India, or if there is a business travel, or if there is a conference, exhibition kind of a thing outside India, or any other current account transaction which are not specified in Schedule 1 and Schedule 2. Very, very clear with this? For these transactions, only if the amount exceeds $250,000 in a particular financial year, then only approval from the RBI is required. Okay, and specifically for medical treatment, for education expenses, and for emigration, for these three, even if it exceeds $250,000, you need not take the prior approval from the RBI. Only for these three, medical, education, and emigration. I hope I am very, very clear till here, everyone. Yes, and this LRS benefit is available for individuals also, and this LRS benefit is available for other than individuals also. It is available, it was mainly introduced for current account transaction, but it can even be utilized for your capital account transactions. I hope I am very, very clear till here. Yes. Okay. Then going on to other part of the Schedule 3, that is for your current account transactions for other than individuals. Okay, current account transactions for other than individuals. For them, they have given 4 points specifically. First one is some specific donations, then commissions. If we have paid any commission for sale of residential flats or commercial plots in India, means the property has been sold here in India, but we have paid the commissions to agents abroad because they have helped us in selling the property here in India, or for remittances outside India, for infrastructure projects and for other consultancy projects for other cases. And if we have remitted any amount outside India as reimbursement of pre-incorporation expenses, means someone from outside India had earlier borne the pre-incorporation expenses of any company here in India, but now we have reimbursed that amount. So can we say in all the cases the money is going outside India, right? If the amount is going beyond this limit, then we have to take the prior approval of RBI. Example, for donation, if you're donating the amount in foreign currency, and if the amount of donation is more than 1% of the total foreign exchange earnings during the last 3 years, or 50 lakh US dollars, whichever is lower. 1% of the forex exchange earnings of the last 3 years, or 50 lakh US dollars, whichever is lower. If more than this is remitted, then you have to take the prior approval of RBI. Okay, similarly, commission to agents abroad. If 25,000 US dollars or 5% of the sale consideration, whichever is higher. If more than this commission is remitted outside India, okay, if more than this commission is remitted outside India, then prior approval of RBI is required. Okay, similarly, for infrastructure projects, if you have paid any consultancy charges exceeding 1 crore USD, then take the prior approval of RBI. For other projects, it is 10 lakh US dollars, then take the prior approval of RBI. And for reimbursement of pre-incorporation expenses, 5% of the investment that person had brought into India, that amount, or 1 lakh USD, whichever is higher. If you are remitting more than this limit, then take the prior approval of RBI. Otherwise, you can do the transaction even without taking the prior approval of RBI. I hope I am very, very clear till here, everyone. Yes? Okay. Then let's go to the next part. The next one is your capital account transaction. Let's try to recollect the most important provisions for your capital account transactions. Yes. Now, capital account transactions definitions, so we have already done. Yes. Now they are telling us here is RBI can, after consulting with the central government, it can decide which type of capital account transactions will be permissible. If it is not which are totally freely permissible, which are permissible up to a certain limit, which transactions will require the approval from the government, etc. This will be decided by the RBI after consultation with the central government. Okay. Similarly, say for example, if there was a PROI who had some property outside India and now he becomes a PRI, can he still hold that property? Answer is yes. Can he acquire some property by way of inheritance from outside India? Yes, he can acquire. Okay, and vice versa also. Suppose if today I am a PRI here, I am having some property here in India and I want to become a PROI, or my status is going to change to PROI, can I still hold the Indian property? Answer is yes. Can I acquire any property by way of inheritance? Answer is yes. No problem in that. Okay, all these things are given in section number 6. Yes. Now, let's try to understand which transactions are permitted, which transactions are not permitted. Let's try to understand, just like we had for current account transaction, schedule 1, schedule 2, etc. Let's try to understand it for this also. Now, for capital account transactions, it will be splitted into 2 categories first of all. Okay. Now, in this, schedule 1 talks about all the permissible transactions which can be done by a PRI. Okay, and schedule 2 contains all the permissible transactions which can be done by a PROI. Okay, all the capital account transactions are basically classified into 2. One, the transactions which are done by a PRI. Example, I am transferring some immovable property outside India. I am borrowing some amount from a PROI, etc. These transactions are done by whom? These transactions are done by a PRI. So these will be falling under schedule 1. Okay, till now we haven't decided whether these are allowed or these are not allowed. We are just classifying the transactions, that is schedule 1, schedule 2. Schedule 1 will be those which are done by a PRI. Schedule 2 will be those which are done by a PROI. Okay, please don't by heart the list given here. Just try to remember that schedule 1 contains all the transactions which are done by capital account transactions done by PRI, and schedule 2 capital account transactions done by a PROI. Very, very clear with this? Yes. Acha. Now, similarly, further they have divided these transactions into 3 categories. First one is transactions with no restrictions. Okay, only 2 transactions are coming up here which can be done without any restrictions. Then 5 transactions which are altogether prohibited. Just like for current account transactions also, we had some transactions which are prohibited, right? Similarly, 5 capital account transactions which are totally prohibited. And for all the other transactions which are not falling in these 2 categories, those can be done but subjected to the regulations. Okay, transactions can be done subjected to the regulations. I hope I am very clear till here, everyone. Yes. Okay. Now let's try to understand which transactions can be done with no restrictions. First of all, repayment of any loan. That is nothing but amortization of loan. That can be done without any restrictions. No problem in that. Okay. Similarly, suppose if there is some depreciation in direct investments which are done in ordinary course of business in some other country, means you have invested some amount in the other country and where a minimum amount of investment was supposed to be maintained, and now your investment has gone below that limit. So to maintain, to come back to that particular limit, if you are doing some additional investment, for that also there is no restriction. Okay, for that if there is no restriction, then in such a case, you need not take any approvals from the RBI or the central government. Okay, so 2 transactions. First one for amortization of loan, that is repayment of loan, and second one is for depreciation in direct investments done in ordinary course of business. I have given the example also. Yes. Achha. Then 5 transactions which are totally prohibited for a PROI. Okay, PROI, if he is doing any of these 5 transactions here in India, it is totally prohibited for him. Now, what are prohibited? Which transactions are prohibited? PROI, doing investments in chit fund business, in agriculture or plantation activities, in real estate business or construction of farmhouses, specifically farmhouses, if they are doing investment in Nidhi company or if they are trading in the TDRs. Okay, these 5: chit fund, Nidhi company, agriculture plantation, real estate or construction of farmhouses, and trading in TDRs. These 5 sectors, they are telling that no entry for a PROI. These will be specifically handled by the PRI only. Yes, and any transactions apart from these 2 plus 5 transactions. Okay, apart from these 2 plus 5 transactions, those transactions will be subjected to the regulations, means for which the RBI is going to give regulations that how to enter into those transactions, whether those are permissible, whether those are not permissible, etc. I hope I am very clear till here. Yes. Now let's try to understand. You remember I had told you that 2,50,000 USD limit can be used for capital account transactions also for individuals. Yes, so here it is. That 2,50,000 USD, that was applicable for, if you are doing it for current account transaction, that can be used by individuals also and persons other than individuals also. But when individuals are utilizing, individuals can utilize it for capital account transactions also, plus your current account transactions also. Yes. Okay, then let's go to the next important part of the chapter, that is your export provisions. Now they are telling that export, yes, export is favorable for the country, but export will be favorable for the country only if we are receiving the sale proceeds on time, right? So whenever any exporter is exporting the goods, he is required to furnish to the RBI and to the respective authorities a declaration which contains all the details about the goods exported and how much amount of consideration will be realized from the other country, and RBI can direct that exporter to comply with certain requirements to ensure that we receive the export proceeds on time. Okay, so declaration is going to contain mainly all the details about the goods exported and how much amount is going to be repatriated or how much amount is going to be realized from that other country. Okay, in some cases declaration is not required. Okay, example, whenever we are exporting some goods for free, example, trade samples, or if we are exporting something for advertisement, when we are exporting our goods, our personal goods to the other country, at that time the declaration is not required. Okay, whenever we are sending some goods to the other country for repairs, suppose if we had imported and now we are sending it for repairs outside India, Means basically where there is no consideration involved. For those cases, the declaration is not required. Okay, and one important point to be remembered here is whenever we are exporting goods, and if the value of goods does not exceed rupees 5 lakhs, then you just give a self declaration that the value does not exceed rupees 5 lakhs, so we have not submitted the declaration. But if the gift value is more than rupees 5 lakhs, then declaration is going to be required. Okay, ma'am, this declaration will be submitted by whom and to whom? So this declaration for goods and services. For goods and services, it is going to be in form EDF, which stands for Export Declaration Form, which will be submitted in duplicate to the Commissioner of Customs. And Commissioner, after verifying it, he will forward the original one to the nearest RBI office, and the duplicate copy will be given to the exporter back, so that the exporter can submit it to the authorized dealer. Authorized dealer means our banker, through whom the export proceeds will be realized. Okay, and in case whenever we are exporting software, then in that case your declaration will be called as form softex, which will be submitted in triplicate to the official of Ministry of IT. Okay, Ministry of IT will forward the original one to the nearest office of RBI. Duplicate copy will be given to the exporter, so that the exporter can give it to the authorized dealer, and the third copy will be retained by that Ministry of IT only. Okay, so this is basically a procedural part that they have given here. The main purpose of this declaration thing is respective authorities should know that what value of goods have been exported and how much amount are we going to receive from the other country. Okay, now normally whenever we are exporting the goods, software, services, within how much time the money should be realized? Okay, within how much time the money should be realized? Whenever you are repatriating, whenever you are sending the goods outside India, normally the money should come into India within a time period of 9 months from the date of export. Okay, or any other extended time period as given by the RBI, but normally 9 months. But whenever you are exporting the goods to the warehouse, means you're going to store the goods there and then you're going to sell it, then in such cases the money should be realized within a time period of 15 months from the date of shipment, or any extended time period as given by the RBI. Very clear with this? Yes. Achha, whenever you are exporting the goods to SEZ, etc. also doesn't matter, it is going to fall under 9 months only. Only when warehouse comes into picture, then 15 months time period is applicable. Very clear with this? Achha, now can there be a delay in receipt of payment beyond the specified period? Answer is yes. Then in that case RBI will come into picture. It will give the directions what is supposed to be done. Either call for the payment from the other country, or if those goods which you had exported, those are kept unsold, then you can re-import those goods back into our country. Very clear with this? Yes. Achha, to avoid all these problems, there was also a concept for advance payment against export. Means first call for the payment and then export the goods. Even this works, but in that case, whenever you receive the money first, then make sure that you complete the shipment of goods within 1 year from the date of receipt of payment. Achha, but what if the agreement provides for a period beyond 1 year? Then period beyond 1 year will be applicable. Otherwise, shipment of goods should be done within a time period of 1 year. If it is not done, and if RBI directs, then we will be liable to pay interest at maximum LIBOR plus 100 basis points interest rate. Okay, and once you have exported the goods, after that, submit the documents of export to the same authorized dealer through whom you had received the advance payment, so that the transaction can be squared off. Yes. Okay, so this was mainly talking about your important provisions from exports. Okay, now listen, how much amount can we hold as forex? We had studied somewhere in section number 4, we cannot own, hold forex, etc. except as per the act. So they say that foreign coins, okay, foreign currency coins you can hold without any limit. There is no limit on that. And in form of currency notes, bank notes, traveler's check, you can hold maximum up to 2000 USD at any point of time. Okay, this is the limit that has been given to us under the FEMA. I hope you are very clear till here. Yes. Then going on to the procedural part and other provisions from the chapter. Can we go ahead? Yes. Okay. So now let's start with the other parts. Now, first of all, there is a person called as authorized person here under FEMA. Now, this authorized person includes your authorized dealer, bankers, money changer, banking unit, offshore banking units, etc., who are allowed by the RBI to deal into forex, to deal into foreign securities, etc. And once they get the certification from the RBI, after that they will be called as the authorized person. Okay, now their authorization can be revoked. Okay, their authorization can be revoked if RBI is satisfied that they are going against the public interest, or authorized person has failed to comply with certain conditions, certain provisions, etc. Then after giving a reasonable opportunity of being heard, their authorization can be cancelled. Okay, now since these people are coming under the purview of RBI, then RBI has got the power. Okay, RBI has got the power to issue directions to these authorized persons. Okay, that how the payments are to be done on behalf of the clients, how are they will also be required to submit the furnish information from time to time to the RBI on behalf of the clients, etc. For that purpose, RBI can direct these authorized persons to comply with their directions. Okay, what if now can RBI also inspect such people? Yes, since these people are coming under the purview of RBI, inspection can be done. Now, say for example, if RBI had asked for certain information and RBI now wants to check whether correct information was submitted by them or not, that is one thing. Okay, or if such authorized person has failed to furnish some information, then RBI can inspect such authorized person. Or if the authorized person is not complying with certain provisions, then also the RBI can do the inspection of such authorized persons. Yes, and it is the responsibility of the authorized person, its officers, managers, etc., to cooperate and to provide the necessary information. Very clear with this? Yes. Okay. Now, similarly, suppose if these people are not complying, authorized person is not complying with any directions given by the RBI, or they fail to file any returns, etc., as told by the RBI, then they will be liable for a penalty up to rupees 10,000. And in case of continuing offense, means even after giving warning, they are still continuing it, then additional penalty up to rupees 2,000 per day. Okay, additional penalty up to rupees 2,000 per day will be applicable. Up to both places it is up to maximum. I hope I'm very clear till here. Okay, now let's do the other penalties, contraventions for other people. Okay, now suppose if there is contravention of any provisions of the FEMA Act, FEMA rules, FEMA regulations, etc., and if the amount of default is quantifiable, then the amount of penalty applicable will be 3 times the amount involved in that particular contravention. And if that default is not quantifiable, then up to rupees 2 lakhs. Then penalty can be applicable on such person up to rupees 2 lakhs. And in either of the cases, if it is continuing even beyond, then there can be a further penalty up to rupees 5,000 per day. Okay, so if quantifiable, then the 3 times the amount involved in the offense. If not quantifiable, then up to rupees 2 lakhs. And in case of continuing one, then up to rupees 5,000 per day. And if we fail to pay this penalty, okay, if we fail to pay this penalty, then there can be, we are supposed to pay it within a time period of 90 days. Okay, that is given in section number 14. We are supposed to pay this penalty within a time period of 90 days from date of receipt of notice. And if we fail to make that payment, then there can be an imprisonment. Suppose if the amount of penalty is up to 1 crore, amount of penalty is up to rupees 1 crore, then imprisonment can be there up to 6 months. If it is more than rupees 1 crore, then it can be there up to 3 years. Very clear with this? Yes, but for imprisonment, can we say that we'll have to first arrest that person? So arrest can be done only after a show cause notice was issued to that defaulting person. Yes, okay. Achha, but in some cases it can so happen that that person is trying to abscond India, is trying to run away from India, then we can even arrest that person without issuing him the show cause notice, because that is required in the interest of the government. Yes. Now, suppose if the person who has been levied with this penalty, that person can go and also make an application to the enforcement directorate, to the ED, that sir, please compound our offense, that is, please reduce the amount of penalty punishment on me. Then in that case, whenever we go and make an application within a time period of 180 days, enforcement directorate may do the compounding. Okay, and if compounding is done, then no further procedures can be initiated against that particular person. Yes, acha. Who will do the adjudication of penalty, etc. here? Just like your SEBI, here also the adjudication will be done by an authority called as adjudicating authority. So as soon as the adjudicating authority comes to know of any non-compliances, it will calculate the amount of penalty. Yes. Now, and once the amount of penalty is calculated, then penalty will be imposed and we are required to pay the penalty within a time period of 90 days. Okay. As soon as we receive the penalty order, after that we can even go, it is not mandatory, but we may go for compounding, and if our application is accepted, compounding can be done within a time period of 180 days. Yes, suppose if we are not happy with the order passed by the adjudicating authority, then we can go for appeals. First level of appeal is special director, second level of appeal is appellate tribunal, and the third level of appeal is going to be your high court. We can go to the special director of appeals within a time period of 45 days from the AA's order. Okay, then if we are still aggrieved by the order passed by the special director of appeals, then we can go to the appellate tribunal within 45 days of receipt of the special director's order, and appellate tribunal will try to dispose it off within a time period of 180 days. And then if we are again aggrieved by the order of the appellate tribunal, then we can go and file an appeal before the high court, but only on question of law, within 60 days, plus the delay can be condoned by a further period of 60 days. I hope I am very, very clear till here. Yes, then there is an inherent assumption of the law that whatever books, documents, etc. has been found in your premises, and if it contains someone's handwriting, signature, etc., then it is deemed that it belongs to you. Okay, unless proved otherwise. If you prove it to the contrary, then that's a different case. But otherwise, whatever is found in your premises belongs to you only. Okay, now in this entire FEMA chapter, the main work is done by the RBI. Right, main work is done by the RBI, and above RBI you have got the central government. So central government will issue the directions to the RBI. RBI will give it to the authorized persons, and that's how the sequence flows there. Okay, then there is a common provision coming up here, that is contravention by companies. In case of contravention by companies, who will be held guilty? The person in charge will be held guilty, but he won't be held guilty if he proves that it was done without his knowledge and he had exercised due diligence to prevent the same. In case of death or insolvency, the case is not going to lapse. It is going to continue against the legal hire in case of death, and in case of insolvency, it will be continued against the official assignee or the official receiver. I hope I am very, very clear till here, everyone. Yes, and after this, you have got three provisions, as you already know. One is your import provisions. Okay, next one is your overseas direct investment provisions, which was newly amended for the May 23 examinations. And then you have got the ECB provisions. For your overseas direct investments, new regulations 2022 were introduced, for which I have specifically put a video on YouTube, for which I'll be sharing a link in the description also. And for import and ECB, already an old video was there on your YouTube. For that also I will be sharing a link. Yes, and with this your FEMA chapter comes to an end. Yes, I hope you were able to revise all the important provisions.